Okay. So hi everyone, good afternoon. So today in day 3 of marathon, let us start with marginal costing and its subtopics. See, as we already discussed that from marginal costing you are going to get 28 marks. Okay, so from marginal costing we are going to get 28 marks. See, that is for only descriptive part, and in MCQs at least minimum 2 MCQs you are going to get, and last time they have given 5 MCQs from alone marginal costing, but minimum of 2 MCQs you are going to get it. Clear? Okay, what it? So in descriptive part, as we have seen that in 2A, for in second question you are going to get for 14 marks. In second question you are going to get for 14 marks, and 3A it will be for 7 marks, and 3B it will be for 7 marks. So what happens? Okay, now from this 14 marks question, most probably you are going to get from decision making techniques. That's wholly based on marginal costing, what you have learned in inter, as well as relevant costing. Relevant costing as well as core marginal costing. These are the core areas we are supposed to complete for 14 marks questions, and for these 7 marks question, out of 2 compulsorily there will be one transfer pricing. Got it right? So if we see past examination question, compulsory they are giving one question as transfer pricing, and the other question can be from either it from probabilities or it might be from product life cycle costing. Okay, then see, one question from out of these 2 7 marks will be from transfer pricing. The other question can be from probabilities or product life cycle costing or asset life cycle costing. Understood? Pricing decisions very rarely you are going to get it. Clear? Now let's try to complete first relevant costing as well as marginal costing techniques. Now, see, to do any marginal costing problem, the first thing we have to understand is segregation of our cost based on the behavior of the cost. How a particular cost is behaving based on the volume of the production. So based on that, our cost is divided into 3 parts. One is variable, fixed and semi-variable. Clear? Now what is variable cost means? A cost which changes proportionately with the change in volume of production is called as variable. It means that, let us say, for 500 units, if cost is 2000 rupees, for 700 units the cost has to be, if you see how much units are increasing by 200 units, okay, how much percentage it is increasing by 40%, change in value by initial value. Percentage is always change in value by initial value. So 2 by 5. So it has to be 40%. Then your cost also has to be changes by 40% only. Clear? Then it is called as a variable cost. A cost which changes proportionately with a change in volume of the production. If volume changes by 10% and if your cost is also changing by 10%, clear, then it is called as a variable cost. See, if we see what is variable cost, a cost which changes proportionately with a change in volume of production. It means for 100 units if it is 2000, for 140 units it has to be 2800. So with increasing 40%, your cost also has to increases by 40%. Sir, when can this is possible? When can this 40% and 40% change can possible? Only when variable cost per unit is constant. Understood, right? For each unit, if it is increasing by the same amount, then only proportionate can be possible. Clear? Then what about fixed cost? Sir, in a particular period, so it's very important thing that it is in a particular period. In a particular period, irrespective of volume of production, if a cost is constant, it is called as fixed cost. Clear? What is in a particular period in the sense? Let us say, sir, let us say in May one cost is 50,000, but in June the same cost became 60,000. Can I say it is fixed? Understood what I am asking, right? In May a particular cost is 50,000 rupees. In June the same particular cost became 60,000 rupees. Can we say it is a fixed cost? Why no? Can be possible. Who knows that? Sir, in May, irrespective of volume, is at 50. And in June, for any number of units, if it is at 60, if yes, it is a fixed cost only. The fixed cost can change from period to period. But in a particular period, in June, for let us say, building rent, in May it was 50,000. In May ending, owner came to us and says that, sir, as per agreement, we have to revise our fixed cost. We have to revise our rent. Let us say when they have written an agreement, they have written like that. Every 3 years once, rent has to be increased by 20%. Understood, right? By this May, exactly the 3 years has completed. Now it has to be increased by 20%. So 20% of 50,000 is nothing but 10,000. Now it is increased to 60,000. And as it is increased from May to June, can we not say that it is not a fixed cost? Is it not a fixed cost? Still it is a fixed cost only. But in June, as that cost is changing, or is that cost is changing based on volume of production? No. So it is a fixed. If it is changing based on production, then it can be variable or semi-variable. If it is changing proportionately with a change in production, then it is a variable. Clear? Understood? So, fixed cost can change from period to period. Sir, in question, how do you know that? Let us say May information given, or else 2023 information is given. They are asking some budgets for 2024. Can we carry forward the same fixed cost, or can we increase or decrease that? It means, as I told, the fixed cost may change from period to period. If really fixed cost changes, question will mention us. Question will mention us. Unless until question is not mentioning us, remember fixed cost is always same from period to period also. That point you have to be careful. Understood? If a cost is changing, it does not mean that it is not a fixed cost. It can be a fixed cost, but after change in that period, so that is the reason why in a particular period a cost is constant irrespective of volume of production. Period to period it can change. Clear? Now what about semi-variable cost? It is simply a cost which has both the components of variable and fixed. So let us say electricity bill. So whenever you see the electricity bill, there can be a fixed charges. Let's say if it is a commercial building, 2000 rupees is fixed. On and above 2000 rupees, for every unit you consume, you have to pay 11 rupee. This has to be the cost structure of electricity bill. Understood, right? What will be your electricity bill if you consume 100 units? It has to be 2000 plus 11 into 100. So what will be your electricity bill if you consume 150 units? 2000 plus 11 into 150. And this part, it is constant, and this part, it is changing and changing constantly per unit. Every unit it is 11 rupees only. Got it right? Such cost is called as semi-variable cost. A cost which has both the components of variable and fixed. Some portion will be fixed and some portion will be variable. So quickly, let us do segregation of semi-variable cost into variable and fixed, because that we are supposed to use it in some of the problems. So now let us say they have given units as well as cost. Let us say the units are 10,000 and your cost is 1 lakh. And when units are 15,000, your cost is 1,30,000. Then how much has to be the variable portion, how much has to be the fixed portion? First of all, when units are changing, cost is changing. It means it is not a fixed cost. Now, is it changing proportionately? Your units are changing by 50%, but your cost is changing by 30%. So definitely it is not a variable cost. So then it has to be a semi-variable, right? If it is a semi-variable, some portion of that has to be variable and some portion of that has to be fixed. Then how much is variable and how much is fixed? Now tell me, what is the feature of fixed cost? It will be constant irrespective of change in volume. Yes, here we are having variable and fixed, and in this also we are having variable and fixed. With a change in volume, will fixed cost changes? No, definitely not. It means the extra cost whatever we have incurred has to be variable cost only, because with a change in volume, fixed cost is not going to be changed anyhow. Agree for that? If see, out of this there is some fixed cost, here also there will be a fixed cost, and here if it is x, here also it will be x. Then the additional 30,000 has to be variable cost only. And how do variable cost changes? Variable cost changes proportionately for each unit extra you are going to incur. Sir, I already produced 100 units. If I produce 10 extra units, how much extra variable cost I am going to incur? Variable cost for that 10 units. If I produce 1 extra unit, I will incur extra variable cost of that unit. If I produce 50 extra units, I will incur variable cost of that 50 extra units. It means how many extra units I produce in now? 5,000. It means the extra cost has to be the variable cost of these 5,000 units only. Yes or no? So variable cost changes proportionately. And how does it behave? With a change in volume, variable cost increases at a constant rate for each unit you manufacture. Understood? Sir, units are increased by 5,000. Cost is increasing by 30,000. Increase in cost cannot be a fixed cost, because fixed cost will not change. Clear? So that increased cost has to be a variable. That too, how do variable cost changes? With every unit extra, you are going to incur extra unit of variable cost. If you manufacture 10 units extra, the extra cost will be 10 units of variable cost. If you manufacture 100 units extra, the extra cost has to be variable cost of those 100 units. Now, I have manufactured 5,000 units extra. The extra cost which I incur is 30,000. It means that 30,000 has to be variable cost of additional units only. From this what we can conclude? Therefore, variable cost per unit is equal to 30,000 divided by 5,000, which is 6 rupees. Sir, for additional units, if variable cost per unit is 6, for these 10,000 units, what is variable cost per unit? It has to be 6 only because it will be always constant, right? For any kind of unit, if they have given variable cost as 6, for all the units it has to be 6 only. For additional units, if it is 6, for existing units also it has to be 6 only. It means that for 10,000 units, what is variable cost? 60,000. So out of 1 lakh, if 60,000 is variable, remaining 40,000 is fixed. So fixed cost is nothing but fixed cost is equal to total cost minus variable cost. Now total cost is 1 lakh and variable cost is 10,000 into 60,000. So total fixed cost has to be 40,000. Clear? Understood? Okay. Sir, now I segregated semi-variable cost into variable and fixed when units and cost is given. When units and cost is given. Sir, let me go for case B also in units and cost. Sometimes I may give like this. January 10,000 units, cost is 1 lakh. February 15,000 units, cost is 1 lakh 30,000. But it is very clearly in question. In February, fixed cost increased by 20% due to increase in rent of a building. Due to increase in rent of a building, in February, fixed cost is increasing by 20%. Yes or no? Then what should be the total cost formula? Generally, you tell me. Total cost is equal to fixed cost plus variable cost. That's nothing but total cost has to be fixed cost plus variable cost per unit into number of units, because total variable cost will be always number of units into variable cost per unit, because variable cost per unit is always constant. So let fixed cost be X and variable cost per unit be Y. If that is the case, total cost 1 lakh is equal to, how much is the fixed cost? X plus number of units is 10,000 Y. This is equation 1. Now what is equation 2? 1,30,000 is equal to 1.2x, because in February rent is increased by 20%, or because of the rent fixed cost is increasing by 20% plus 15,000 Y. Now whenever there is change in fixed cost, definitely we have to go for equation methods only. There is no way that I can use this formula. Understood, right? This I can use it. Change in cost divided by change in units, I can use it only when fixed cost is not changing from period to period. But just now we discussed one point. Fixed cost may change from period to period. Clear? So then if that is so, definitely we have to write the equations. By writing equations only, we have to solve the how much is the variable cost and how much is the fixed cost. Clear? First of all, you understood how to write equations, right? Easy, right? Then to make it cancel, I will write 1 into 1.2. 1 into 1.2, that is nothing but 1 lakh 20,000 is equal to 1.2x plus 12,000 Y. Let's say this is equation 3. Then I will make 2 minus 3. What is 2 minus 3? 10,000 is equal to 3,000 Y. Now therefore, variable cost per unit is equal to 3 by 10. Variable cost per unit is equal to 10 by 3 is equal to 10 by 3.33 rupees per unit. Clear? And what has to be fixed cost? Fixed cost in January is equal to total cost is 1 lakh minus variable cost is, so variable cost has to be number of units into variable cost per unit. So number of units is 10,000 into 10 by 3. 66,667. Now what should be fixed cost in Feb? It has to be 1,20,000 minus 15,000 into 10 by 3, or 66,667 plus 20%, because we already know that this 20% more than January. Either you can take directly plus 20% from January 1, or else we know that it has to be total cost minus variable cost. Both the things will give the same answer. So how much it will be? 80,000. And here also we are getting the same, right? Understood? So to segregate semi-variable cost into variable and fixed, if fixed cost is changing, use equation method. If fixed cost is not changing, then we can directly say that the increasing cost, whatever the cost is increasing, that has to be the variable only, and that the variable of the additional units. 1 lakh? Which one? Okay, 1,30,000 I have written. Okay, fine. 1,30,000. Anyhow, both we are getting 80,000 only, right? Now, sir, when units on sales is given, I understood how to segregate semi-variable cost into variable and fixed. But when sale value and cost is given, then what, sir? When sale value and cost is given. So with units, how cost is behaving, I understood, so I able to solve the problem. But with sales, how do variable cost behave and how do fixed cost behaves? That also we should understand, right? Got it, right? Let's understand that. Let us say I am manufacturing the first unit. To manufacture first unit, variable cost I incurred 10 rupees. Now to manufacture the second unit, how much should be the variable cost? It has to be 10 only. To manufacture third unit, how much should be the variable cost? It has to be 10 only. To manufacture fourth unit also, it has to be 10 only. Agree or not? Now, what has to be this? Let us say selling price is 15 rupees. Selling price is 15 for each unit. And fixed cost is equal to 30,000. Means irrespective of number of units you are selling, your fixed cost will be 30,000 only. Which means that with a change in sales, fixed cost is constant only, it will not change. But how do variable cost behaves? Sir, as this is a particular unit cost, so let me tell me that when do I incur these 10 rupees? When do I incur these 10 rupees? When I manufacture fourth unit only. If fourth unit is not manufactured, this unit might not have incurred. Yes or no? Understood or not? So how do I cover this 10 rupees? How do I cover the 10 rupees? I has to cover the 10 rupees from sale of this fourth unit only, because it is a particular unit, unit's cost, so it has to be recovered from the same unit. That's what the marginal costing concepts tell us. See here, so 7th unit variable cost has to be recovered from selling 7th unit only. 10th unit cost can be recovered from selling 10th unit only. Let me give the reason also. So let us say that we are able to sell the first unit. After recovering its own cost, how much is that? We sold the second unit also. After recovery of its variable cost, how much is left over? Same 5 rupees. Let us say these two combined giving us 10 rupees, right? Now, let us say first unit and second unit is going to talk with third unit. And both are saying that, so third unit, don't worry about your recovery of the cost. Our owner has produced us as well as you also. But customers like this, and we are able to generate some revenue for the owner. But you never bother about it because we also recovered, we two combinedly also recovered your 10 rupees also. So no need to be worried about it. So don't bother about and don't think about suicide and likewise because no one liked you. And what is third unit will tell you? What is third unit will tell to first two units? See, now as I am not able to sell today by this time, does it mean that owner is going to throw me in a dustbin? Is owner is going to throw me in a dustbin? No. So they have manufactured you guys first. So whenever customers approached, owner has sold you both. So the next customer, whenever he is going to arise to the premises, if they're asking for selling of any unit, definitely they're going to tell me only. I can recover my own variable cost. I can recover my own variable cost. You don't need to sacrifice anything. Understood, right? If you really wanted to recover my 10 rupees, okay, you both go and recover total common cost is there, right? You both go and cover our common cost of 30,000. If still money is left over, you recover my cost. Will fall from the myself, and it get damaged because anyhow you recovered. Understood, right? No, they can one on first unit and second unit alone can recover for total fixed cost. No, definitely because each unit has to contribute towards something because it's a common fixed cost, right? That's what marginal costing concept tells us. What is marginal concept tells us is variable cost of a particular unit is incurred when that particular unit is manufactured. So it has to be recovered only when that particular unit is sold. Clear? Clear? Or let us say, so you completed your CMA in first attempt, got good job, got some decent salary, and you thought to start some decent, any one business at home itself, no fixed cost. It's the only variable cost at home itself. So tell me one business what we can do at home. Okay, pickles. Okay, pickles. So let us say you bought 100 kgs of mangoes. You bought 100 kg of mangoes and you bought some oil and all different raw metals whatever you require. So by mixing all those things, let us say you got 125 kgs of pickle, because the different ingredients also give some weight. Oil, salt also give some weights to the pickle, right? So with 100 kgs of mangoes, we are able to get 125 kgs of pickles, and all these pickles you packed into 1 kg pickles. 1 kg packets. Got it, right? How many packs you get? 125 packets you are going to get it. Clear? So you started in April, let us say exactly you started your business in April 1st. You purchased raw materials and all, you started in April 1st. By 30th April, you are able to sell only 70 packets of pickle. You are able to sell only 70 packets of pickle. Let us say to manufacture all those 125 packets, so each pack you incurred cost of 100. The total cost what you incurred divided by 125 you did it. So each packet cost is 100. Now each packet you sold, 70 packets you sold, let us say, for 140 rupees. What is the total cost you incurred? What is the total cost you incurred? 1,500 is the cost you incurred. How much is the amount you recovered? 9,800 you recovered. total now? So net 2700 loss. Can you say that you got a loss of 2700? No. Why? Still stock is left over for you. What you are going to do with that stock? Sell in the next month. If you are not able to sell in April, definitely you can carry forward to the May and you are going to sell in the May, right? Understood? Does it mean that as month end came, in May 1st, again I have to start buying mangoes, and whatever the leftover stock is there, throw it in a dustbin? Will you do that? No, right? So what is real profit for you? 70 packets I sold. Each packet I sold for 140. For each packet I incurred a cost of 100 rupees. So I got 40 rupees margin from each packet. 2800 has to be profit for us. So this is how you are going to evaluate the profit. We are not going to evaluate as loss. Why? Because stock is still left over with us. So if we are not able to recover the cost in the same month, whenever we manufacture, in whichever month we manufacture, it does not mean that that is a loss. It can be covered in the next month, because manufacturer is not going to throw it out. Definitely is going to sell in the next month. Am I clear? So what is normally they say is, as variable cost of a particular unit is incurred only when that particular unit is manufactured, it has to be recovered only when it is sold. And unsold units of a variable cost. What should we do? We should carry forward to the next period and recover in the next period. Am I clear with this? Got it right? Now let us see relationship of variable cost with sales. Sir, variable cost per unit is constant, as well as sales also per unit is constant. Whenever I sell one unit, how much of the variable cost I recover? 10 rupee. It means whenever I sell a unit, before covering fixed cost, I have to cover variable cost. Out of total sales, how much is the proportion of variable cost is there? 75% of variable cost is there. Understood, right? It means that from each unit you sell, 75% will be to recover variable cost. Remaining 25% will go towards recovering fixed cost. After recovering such fixed cost, you are going to start getting profits. After recovering of that fixed cost, you are going to get profits. Clear? Now, after selling 100 units, what will be your variable cost? 100 into 10. What will be your sales? 100 into 15. What is the percentage of variable cost on sales? Still it will be same, 75%. And what we can conclude? We can conclude that percentage of variable cost on sales will be always constant. Percentage of variable cost on sales will be always constant. Clear? Understood? If you understood this one, now let us see the segregation of semi-variable cost into variable and fixed when sale value and units, or the sale value and cost is given. Clear? Now let us say the given sale value as well as cost. Sale value is 1 lakh, cost is 80,000. When sale value is increased to 1,50,000, cost is increasing to, let us say, 1,20,000. Clear? So how much cost is increasing by? 40,000 rupees. Now, with increase in sales, will fixed cost changes? With increase in sales, fixed cost will not change. That's what we discussed. And with the increase in sales, will variable cost changes? Yes, because for each unit you sell, you have to recover its own variable cost. If you sell 100 units, you have to recover 100 units variable cost. If you sell 200 units, you have to recover 200 units variable cost. So by selling 50,000 rupees extra, you have to recover variable cost of that additional units. So this 40,000 has to be variable cost of additional sales. Understood, right? And what is percentage of variable cost on sales for additional sales? Percentage of variable cost on sales is equal to 40,000 by 50,000, which is equal to, sir, for additional sales, if it is 80 percentage, for the existing sales, it has to be 80 only, because percentage of variable cost on sales will be always constant. For first unit, if it is 75, for 10th unit also it will be 75, for 10th, 11th unit also it will be 75, for 100 unit also it has to be 75, for first 100 units also it has to be 75, because 100 get cancelled, right? So for additional units, if it is 80%, for all the units it will be 80% only. Then definitely, what is variable cost in this? What is variable cost in this 1 lakh? That has to be 80,000. Oh, I think exactly I taken variable cost. Because how much is sales is increasing by? Cost is also increasing by? It's exactly variable cost, so we got variable cost only. Okay, let me change this one as 1 lakh. So cost is changing by 20,000. 20,000 by 50,000? 40 percentage. If variable cost is 40 percentage, now how much is 1 lakh into 40 percentage? So 40,000 has to be variable. If out of 80, 40,000 is variable, the remaining 40,000 has to be fixed. When the sales is 1 lakh, variable cost is 40,000 and total cost is 80,000, right? Out of 80,000, if cost is variable cost is 40, then fixed cost has to be remaining 40,000. Understood or not? Sir, variable cost on sales is 40 percentage. At this level, what should be the variable cost? 1 lakh into 40% only, right? So it has to be 40,000. It means out of total cost of 80,000, if variable cost is 40,000, then remaining 40,000 has to be fixed. Or if you want, you can apply it here also. What is variable cost at 1,50,000 sales? It has to be 1,50,000 into 40%, which is equal to 60,000. Then what has to be fixed cost? Total cost is 1 lakh minus variable cost is 60,000. Then remaining has to be 40,000. Clear? So thing is that whenever we have to segregate, there are two things we have to consider. Units, variable cost per unit is constant. Sales, variable cost on sales, percentage of variable cost on sales is constant. And the extra cost, whatever we are incurring, the fixed cost is not changing. Fixed cost is not changing. The additional cost has to be variable cost on sales. But if the same question, same thing they have given that. Sale value, cost. Sale value is 1 lakh. Cost is 80,000. The sale value is 1,50,000. Cost is 1 lakh. Okay, cost is 1 lakh. This is in January and this is in February. So from here to here, fixed cost is increasing by 20%. This is the case. Then how to solve the question, sir? One thing we know that what is total cost is equal to plus variable cost. Clear? Now that is nothing but total cost is equal to cost less sales into percentage of variable cost. Sales into percentage of variable cost, right? Because variable cost will be always sales into percentage of variable cost. That implies 80,000 is equal to cost only, just think fixed cost as is, and sales is 1 lakh. The percentage of variable cost as y. Then 1 lakh should be equal to 1.2x plus 1,50,000 y. Clear? Now take this as equation 1 and this as equation 2. Now 1.2 into 2. Then what is 80,000 into 1.2? 96,000. 96,000 is equal to 1.2x plus 1,20,000 y. Now if you take 3 minus 3, 4,000 is equal to 30,000 y. Then y should be equal to 4,000 by 30,000, which is 3.33 percentage. Clear? 3.33 percentage. 4,000 by 30,000 into 100. 13.33 percentage. Clear? Then what has to be fixed cost then? Every time variable cost has to be 13. Fixed cost in January is equal to total cost is 80,000 minus variable cost is 1 lakh into 13.33 percentage. $670. Clear? This has to be. Then what should be in February? In February it has to be 1 lakh is the cost minus sales is 1,50,000 into 13.33 percentage. $80,000. What is 66,670 plus 20 percentage? It has to be 80,000. Clear? It has to be 80,000. Now this is how to segregate semi-variable cost into variable and fixed. Got it? And one more thing we discussed, that variable cost of a particular unit is incurred when that unit is manufactured comma, it has to be recovered when that unit is sold. That is unrecovered variable cost is transferred to next period. unrecovered variable cost is transferred to next period. Clear? Now second one. So when do we incur, how do we incur a fixed cost? So fixed cost is a period cost. Variable is a, so because it depends on product cost. So product cost recovered from product. Period cost recovered in the same period. Understood, right? As fixed cost is incurred in a particular period, it has to recover in the same period. So that is unrecovered fixed cost is treated as loss. Unrecovered fixed cost is treated as loss. If you are unable to recover variable cost, never bother about it. Carry forward to the next period and recover it. If you are unable to recover fixed cost, it has to be a loss. Clear? No. Based on the concepts which we discussed till now, the income statement looks like this. Got it right? Now, sir, if I sell 1 unit, I have to recover 1 unit of variable cost. If I sell 2 units, I have to recover 2 units of variable cost. If I sell 50 units, I have to recover 50 units of variable cost. Irrespective of the units, in one particular period, if you are able to sell only 1 unit in one period, let us say your fixed cost is 3000 in May. In May, if you sell 1 unit, how much fixed cost you have to recover? Whole 3000 you have to recover, but from 1 unit, how much after recovery of its own variable cost? Every unit after selling, it will try to recover first its own variable cost, and then it will contribute left any extra amount, if there is any extra amount, to recover towards fixed cost. That is the reason why it is called as contribution. Clear? Every unit first it recover its own variable cost, then it will contribute something towards recovery of fixed cost. For a period of time, as each one extra unit if you are selling, one more extra unit you are selling, one more extra unit you are selling, every unit keep on contributing 60 rupees. At one particular point of time, you will recover your fixed cost. After recovery of your fixed cost also, if you sell one extra unit, that one extra unit also will contribute something after recovery of its own variable cost. That will start going for profits. Understood, right? Once after recovery of your fixed cost only, you start getting profits. Clear? Understood? Then take 1 minute time, observe this statement once. Clear? Now let's write some observations what we did. Let us write some observations. So first one, contribution per unit is constant. Contribution per unit is constant. Second one, sir, if you see, if you sell one extra unit, you are getting extra 60 rupees. How much your profit is increasing by? Or else here if you see, from 50 to 51, one extra unit you got additional contribution of 60 rupees. Your profit is also increasing by 60 rupees. So from 50 to 100 if you see, your contribution is increasing by 3000 rupees. So your fixed cost is also increasing by 3000 rupees. Yes or no? From here to here, your contribution is increasing by 3000. From here to here, your fixed cost, your profit is also increasing by 3000. So what is the reason? Because by selling one additional unit, you no need to recover additional fixed cost. Do you want to recover additional fixed cost by selling one extra unit? No, because every time the recovery of fixed cost is same. It means change in profit will always equal to change in contribution. Very, very important point. Based on this, many lot of problems are depending on. Understood, right? Change in profit will be always equal to change in contribution. If contribution is increasing by 10,000, your profit also increases by 10,000. Clear? Okay. Now, based on these observations, let us write some formula. Let's write some formula. Now, first one is PV ratio. Sir, what is PV ratio? So, PV ratio in the sense percentage of contribution on sales, and it is also called as contribution ratio. It's nothing but percentage of contribution on sales. And what should be PV ratio formula now? Contribution by sales. Contribution by sales, or you also can take contribution per unit by sales per unit, because if selling price per unit is 200 and contribution is 60, if after selling 100 units, how much your contribution? 60 into 100, because contribution per unit is also constant, right? What will be your sales after selling 100 units? Into 100. So 100 get cancelled, again still it will be 60 by 200 only. So it means every time it has to be 60 by 200 units. If you take total contribution by total sales or contribution per unit by sales per unit, your answer has to be the same. Now that is equal to, sir, observe here. From here to here, how much contribution is changing? How much your sales is changing? 200. That's nothing but 60 by 200. 60 by 200. So that is nothing but change in contribution divided by change in sales. That is nothing but change in profit divided by change in sales. Why, sir? Because change in contribution is nothing but change in profit only. Agree? Check it at any point. So from here to here, from 50 to 100 units, How much is contribution is changing? 3000. So how much is sales is changing? 10,000. So how much is contribution ratio? How much it is? 30%. So for per unit, if we take it 60 by 200, 30%. At any units you take it. So 3000 by 10,000, 30,000 only. Even if it's take change in profit by change in sales, it will be PV ratio only. Clear? That also we are going to use it many times, right? So that is also you have to keep in mind. This we never use it. Why don't we use this? Because to find out change in contribution means two levels of contribution, if two levels of sales is given, from each level itself I can find it out, right? Because contribution by sales is PV ratio. If two levels of contribution of two levels of sales is given, with one level itself straight away I can find it out. Sometimes they won't give you contribution, instead they will give profit. With one level profit divided by one level sales, we cannot get PV ratio. But change in profit by change in sales, definitely we are going to get PV ratio. Clear? So if more than one level is given, profits, with profits, I have to use this formula. Contribution anyhow, I am not going to use it. Clear? And that is also can be equal to 1 minus variable cost ratio. Because from sales, if you deduct variable cost, how much is left over? Contribution only. If variable cost is 60%, contribution has to be 40%. Clear? If variable cost is 70%, then contribution has to be 30%. Clear? 1 in the sense 100% only. 1 is nothing but 100%. 100 by 100. 50% is 50 by 100. 20% is 20 by 100. 100% is nothing but 100 by 100, which is nothing but 1. Clear? Okay. That is PV ratio. Next, let's go with break-even point. So tell me what is break-even point means. It is level of sales. Level of sales at which no profit or no loss. That is sales level at which contribution is equal to sales level at which contribution is equal to fixed cost. Sales level at which contribution is equal to fixed cost. Because when do we have no profit, no loss? Whenever exactly our contribution is equal to fixed cost. Now if you tell me how much is break even, what is break even sales? Break even point units is equal to, see, break even means no profit, no loss. Break even point means level of sales at which no profit, no loss. Break even means no profit, no loss. Understood? If you just understand the meaning of break even point is no profit, no loss, you cannot frame formulas. You cannot get concept properly. Break even point is no profit, no loss. It's mistake. Break even means I got a break even. What does it mean? I got no profit, no loss. Now, at what point I got a break even? At 50 units. At 50 units or at 10,000 rupees. Because break even point is level of sales. Level of sales. It means if they're asking you the break even point, if they're asking you break even point, they want sales level. They want sales level at which you got a break even. Understood? Point they're asking, not just break even. Break even is no profit, no loss. But break even point, level of sales. Clear? I want sales level. Now, how many units are required to get a break even? That's what, right? Now, sir, remember, to get a break even, I should recover the total cost. To get a break even, I should recover total cost. But we never bother about variable cost because variable cost of a particular unit will be recovered by itself. Understood, sir? If variable cost is not recovered by itself, then sir, then why do they ask you to calculate break even? If someone is asking you to calculate a break even without covering its variable cost itself, will they ask you a break even? At that point, there will be no break even. Sir, why marginal costing first of all? Why are we doing marginal costing? To make short-term decisions, situational decisions. Situational decisions. Sir, this is a situation. Now, due to scarcity of the raw material price is increased a lot. At this scenario, how many units I have to sell to get a break even? Understood, right? Before that, I am going to evaluate it. Okay, if I can sell those number of units, I will do a business. Otherwise, I will stop for doing business for certain period of time. Till then, raw material is available at a normal price. Understood or not? So, likewise, every situation, situational decision making only, marginal costing. We never take long-term decisions based on marginal costing. We always take short-term decisions. On that particular point of time only, we are going to take a decision. If situations changes, my results of marginal costing changes. My decision making changes. Understood? Clear? So, at present conditions, what is my break-even point? First thing, no one will come to you for taking short-term decisions if they are unable to recover its own variable cost. To produce one unit, let's forget about factory and forget about machinery and all. If to produce one unit, raw material cost is 5 rupees, labor cost is 3 rupees, 8 rupees is the cost. But there is no one ready to pay 8 rupees per you. Maximum customers are willing to pay 6 rupees. Then why do you come to make a decision? Why do you ask me a decision? Will you go to a cost accountant for that? No, shut down your business and go out and do some other business. If you are not even covering your variable cost, then why are you talking about any decision making? There is no decision making, only one decision making. What is that? Shut down and go and do some other business. Understood? It means if we are talking about marginal costing topic, our variable cost is already covered. Our variable cost is already covered. When do I get a break even? After recovery of total cost. But do we bother about variable cost? No, because it's already recovered. By the time I talk about marginal costing, any concept, a variable cost is already covered. It means which one I'm supposed to cover now? Fixed cost. How do I cover fixed cost? Each unit. How do we cover variable cost? Variable cost of a particular unit is incurred when that particular unit is manufactured. So it has to be recovered by selling that particular unit only. That is one statement we made it. Next, fixed cost. How do we recover fixed cost? Each unit after recovery of its own variable cost will contribute something to recover fixed cost. That is the reason why from contribution only we recovered fixed cost, right? Yes or no? From contribution only we recovered fixed cost. So how do we recover fixed cost? Each unit will contribute towards recovery of fixed cost. How much each unit is contributing? That is what? Contribution per unit. That's what contribution per unit. Sir, I want 3000 rupees fixed cost to be recovered. And each unit is contributing 60 rupees. How many such 60s I do require to recover the 3000? That's nothing but 3000 by 60 only. 3000 by 60. Then what has to be the break-even point formula? It has to be fixed cost divided by contribution per unit. Clear? Then what about break-even point sales? Sir, I have units. If I want value into selling price per unit, I want sale value. I have sale units. Sale units I'm having. If I want sale value into selling price per unit, I'm going to get sale value, right? So now this is nothing but break even point units into selling price per unit. That is nothing but fixed cost by contribution per unit into sales per unit. Sir, we are already having one formula here. What is that? PV ratio is equal to contribution per unit by sales per unit. Then sales per unit by contribution per unit has to be 1 by PV ratio. Sales per unit by contribution per unit is nothing but 1 by PV ratio. So which has to be fixed cost divided by PV ratio. Understood? Got it? Or else let me talk about some other concept. Sir, what is total contribution? What is PV ratio means? Percentage of contribution on sales. Clear? Now we discussed one point. Level of sales at which contribution is equal to fixed cost. It means that at break even point, contribution should be equal to fixed cost. And what is contribution? Contribution is nothing but sales into PV ratio. Sir, PV ratio is nothing but what? If PV ratio is 30%, what does it mean? Contribution is 30% of sales. What is PV ratio? Percentage of contribution on sales only, right? Understood? Then contribution is nothing but sales into PV ratio. Agree now? Now sales into PV ratio should be equal to fixed cost. Then sales is equal to fixed cost by PV ratio. At break even point sales. This is nothing but break even point sales. At break even point sales contribution is equal to fixed cost. That's nothing but sales should be equal to fixed cost by PV ratio. Either you can go with this logic or you can go with this logic. Either way it has to be fixed cost divided by PV ratio. Clear with the formula? The break even point is fixed cost divided by PV ratio. Sir, formulas is okay, but understand my explanation, because this explanation is required to solve problems. What I am talking about here, sir, at break even point, sales, whatever the contribution we are getting from the sales will be equal to fixed cost. Am I clear? Okay, let me apply that one later so that you can understand it. Formulas, I think every one of you already know it. But why I am explaining this one? Because this explanation is really required to solve many problems. Just remembering the formulas or by hurting the formulas will not make margin costing problems easier. But if we understood how the formula is came and if we understood the meaning of the formula, then definitely your margin costing will be easiest one. Clear? Okay. Next, third one. Desired profit sales. What is desired profit sales means? Level of sales to get required profit. How many sales are required to get desired profit? Let us say my desired profit is 10,000. It means at desired profit sales, contribution is equal to contribution should be equal to fixed cost plus desired profit. Sir, if you want 3000 rupees profit, let us say, if I want 3000 rupees profit, first how do I get 3000? From contribution we have to recover fixed cost, then only we start getting profit. If I want 3000 profit without covering of fixed cost, do I get it? I have to recover fixed cost, right? So fixed cost 3000 plus I want extra 3000. So total how much I should get from contribution? 6000. So at desired profit sales, your contribution has to be equal to fixed cost plus desired profit. Now based on this, what is desired profit units? Desired profit units is equal to, sir, each unit is contributing something. That's nothing but contribution per unit. From each unit, how much we are supposed to recover? Contribution by contribution per unit. That has to be number of units, right? Then what should be the total number of units to get a desired profit? What should be the total contribution to get number of desired profit? So we have to recover fixed cost plus desired profit. Clear? Desired profits units are nothing but, if to get a profit you have to recover a fixed cost. Fixed cost, see, break even point you have to recover fixed cost, and that fixed cost is recovered by contributing each unit, which is nothing but contribution per unit. Same, after recovery of fixed cost, if you want any additional amounts also, it is not from sales, it is still contribution per unit only, because even for additional sales it has to recover its own variable cost, because whenever we sell one extra unit, first and foremost thing it has to recover is its own variable cost. Yes or no? Every time, any point, it might be existing sales, it might be the new sales also, because to sell a new unit, first what should you do? To sell an extra unit, what should you do? First you have to manufacture that extra unit. To manufacture that extra unit, you won't incur any additional fixed cost, but definitely you are going to incur additional variable cost. At least you have to recover that one to start giving towards recovery of fixed cost or getting profits. Understood, right? For every extra unit or for every unit whenever you sell, first thing you have to recover is our own variable cost. After that only we are going to get contribution per unit, and from that contribution per unit only I have to recover my fixed cost as well as my desired profit. Clear? And what has to be desired profit sales? Same, fixed cost plus desired profit divided by PV ratio. Same logic. Sale units into selling price per unit. Selling price per unit by contribution per unit. Understood, right? Or else we know that at the desired profit sales, contribution should be equal to fixed cost plus desired profit. What should be contribution? Sales into PV ratio. Contribution is nothing but sales into PV ratio. So sales into PV ratio is equal to fixed cost plus desired profit. Therefore, sales is equal to fixed cost plus desired profit divided by PV ratio. That is the sales we do require. Understood? Okay. Next very important thing is margin of safety. Sir, what is margin of safety means? Margin of safety in the sense, MOS is sales on and above break-even sales. Sales on and above break-even sales. Sir, what are break-even sales? Sales, the contribution of sales which recovered fixed cost is called as break-even sales. The sales contribution which recovered fixed cost is called as break-even sales. Sir, after break-even point, any additional units you sell, that is called as MOS. That is nothing but after break-even, each unit if we sell it, whatever the contribution we get it, that contribution will go towards profit only. Understood, right? That is, indirectly we can say that MOS are sale units which contributes towards profit. Can I say that statement? MOS are sale units which contributes towards profit. Sir, I don't need to recover any fixed cost because MOS starts after recovery of fixed costs only. MOS will start after recovery of fixed cost only. Clear? Clear. So as it is no need to recover any fixed cost, the total contribution whatever we get from MOS sales will straight away go for profit. Or simply speaking, the sales which gives profit is nothing but MOS sales. The sales which recovers fixed cost is nothing but break-even sales. Clear? And what has to be MOS units? MOS units has to be equal to total sale units minus break-even point units, or that is nothing but, what is break-even point formula? Fixed cost by contribution per unit, because it is recovering fixed cost. Now MOS is giving profit, so it has to be profit by contribution per unit. So it's nothing but how many units given profit. How do you, first of all, how do you get profit? After recovery of fixed cost, each unit will contribute and form profit. Then how many units formed that one? Total profit divided by per unit how much it is given. Sir, in this given example, let us say how many units it took to get a break even? 50 units. After 50 units, whenever you sell one additional unit, the contribution, the additional contribution from that extra units is starting straight away is going to profit, right? If I get 60 rupees as a profit, I got 60 rupees profit. What is contribution per unit? 60 rupees only. That's what, right? Contribution per unit is 60 rupees, right? My profit is 60. So how many units contributed me profit? 1 unit. So MOS is 1 unit. So when my profit is 3000, each unit is after break even, each unit given 60, 60, 60, 60, and they made it 3000. Now how many units made 3000? That's divided by 60 only, because each unit is given 60 means how many units made 3000 in the sense 3000 by 60? Yes or no? How many units made 3000? 50 units. After break even, how many units we sold? 50 only, because we got at 100 units, right? At 100 units. What is MOS sales means? Total sales minus break even sales. At 100 units, I got profit of 3000. What is MOS units? From 100 units, deduct break even units, then you are going to get MOS units. That's nothing but units which has contributed towards profit. Simple, sir. How much is the total contribution we got? How much is the total contribution we got? 6000. Out of the 6000, how many units contribution is required to recover fixed cost? 50 units. How many units of contribution is required to recover fixed cost? 50 units. After 50 units, how many extra units we sold? 50. And for extra 50 units, what is contribution per unit? 60 only. So 50 into 60, 3000. Understood, right? This is the contribution of sales on and above break-even sales. Understood, right? So which is nothing but profit. Clear? That's what MOS units. Then what is MOS value? MOS value is equal to total sale value minus break even point value. Total sale value minus break even point value. That is nothing but profit by PV ratio. Understood, right? Okay. So finally we conclude one thing. Our total sales is divided into two parts. Break-even sales, MOS sales. Now break-even sales into PV ratio, fixed cost. MOS into PV ratio, profit. Understood or not? That's nothing but contribution from break-even sales is fixed cost. Contribution from MOS sales is PV ratio. So it's nothing but contribution from MOS sales is profit. Contribution from break-even point sales is fixed cost. Understood? Clear? So up to this, based on this only, last time they are given 3 MCQs. Only up to this, today whatever we discussed, up to this 3 formulas or 4 formulas whatever we discussed. So if you can see your past examination question paper, so this is December 25 paper. One second. Okay, this is December 25 paper. If you see, they are given straight away 3 MCQs from marginal costing, and also there is one more question from marginal costing and one more question from marginal costing, but this is from target costing and subpart of marginal costing, and this is also subpart of marginal costing, but this is straight away whatever we discussed till now, 6 marks. Clear? Let us see, read that one. RIM Limited has estimated the demand level of its product. So they says that the demand level can be 5,000, can be 10,000, can be 15,000, or can be 20,000. Okay. It is estimated that contribution per unit is 4 and total fixed cost is 60,000. Now what is the probability that the company will make a profit of at least 15,000? So to make 15,000 profit, how many units we have to sell? Desired profit is equal to fixed cost plus desired profit. So if I have to get 15,000 profit, how much I am supposed to recover? 60,000 I have to recover plus 15,000 also I have to recover, and all this I have to recover from contribution per unit only, because every unit has to recover its own variable cost and it will contribute something towards recovery of fixed cost as well as profit. And how much it is contributing? 4 rupees. Then how much it is? 75,000 by 4. 18,750. Now what is the probability that we get more than 18,750 sales? Out of this only 30%. All these are less than 18,750. So our answer has to be 30% chance only we can get profit of 15,000, because 70% chance that our sales will be lower than 18,750. Easy bit. Understood, right? Okay, next bit. SM Limited, a manufacturing company, produces a product which is having a selling price of 80 per unit, and break-even sales is 15 while fixed cost is 6. What will be the desired quantity to get a profit of 4 lakhs? Okay, to get a profit of 4 lakhs, what has to be desired units? Sir, one thing they given, break-even sales is 15 lakhs and fixed cost is 6 lakhs. See, contribution on break-even sales has to be 6 lakhs, right? Yes or no? Contribution on this 15 lakhs only. That's nothing but this 15 lakhs into PV ratio. That's the reason why I told you, if you are learning formulas, you cannot solve this MCQ. But if you learn the concepts, definitely you can solve these kind of MCQs. Just now we discussed one thing. What is that? Contribution on fixed cost is, sorry, contribution on break-even sales is fixed cost. Contribution on MOS sales is profit. Clear? Now, upon this 15 lakhs, whatever the contribution we are getting, that has to be equal to 6 lakhs. Then what should be PV ratio? PV ratio is, tell me, 6 by 15, 40%. Now what they are saying, desired quantity to get a profit of 4 lakhs. If I want desired profit of 4 lakhs, what I am supposed to recover? How to recover? Fixed cost plus desired profit divided by 40%. 10 lakhs by 40%. $25 lakhs. What is cost per unit? 80. As they ask number of units, I want 25 lakh rupees. No, number of units is 31,250. Understood? Check it how quickly we can see this one, these kind of problems, if you know concepts very properly. Done? Understood? Okay. Move to this third bit. BOS Limited, a manufacturing company, requires 90 lakhs in sales to meet a target profit of 15 lakhs. It means to get a profit of 15 lakhs, I wanted to sell 90 lakh units and the company's contribution is 30%. Then what will be fixed cost? Sir, out of 90 lakhs, there will be break-even sales and MOS sales. MOS sales into 30% is MOS into 30% should be equal to profit. Sales which gives profit is nothing but MOS sales, right? Because the given profit is 15 lakhs. Following now. The given profit as 15 lakhs. Where do we get profit from? MOS sales only, right? Contribution on PV ratio on MOS sales is nothing but profit. And what should be MOS sales? MOS sales is nothing but 15 by 30%, which is 50 lakhs. Out of 90 lakhs, if 50 lakhs is MOS sales, then break-even sales is 40 lakhs. And upon this 40 lakhs, if you apply a PV ratio, that has to be fixed cost, which is 12 lakhs. Just to the formula of MOS and break even, they are given 3 MCQs. See, we can solve these kind of questions very quickly, definitely. They told that 15, so whenever you see profit contribution, immediately MOS has to be striked. Got it right? Because upon MOS sales, margin only, that will profit. Understood right? So MOS sales into PV ratio, contribution ratio has to be equal to profit. Therefore MOS we can get it. Total sales is given. Total sales low, MOS is 50, then remaining 40 has to be break even sales. And what did they ask us to find out? Fixed cost. Fixed cost is nothing but contribution on break even sales. Contribution on break even sales. Clear? Understood? Okay. Even this here itself I will explain the concept to solve this question. What is meaning of shadow price? What is the meaning of shadow price? Now listen. Shadow price is the contribution lost of not having any factor or of not having any resource. Understood? Let me take one example so that you can understand. Sir, I want 4 laborers to produce 1 unit. I want 4 laborers to produce 1 unit. Clear? Now, each unit I can sell it for 100 rupees and fixed variable cost is 60 rupees. Then what is the contribution for me? 40 rupees. Clear? To get this 40 rupees, how many laborers I do require? 4 laborers. Then what is contribution per laborer? 10 rupee. Understood right? Now labor is very scarcity in the market. Labor is very scarcity in the market. If I am losing 1 laborer, how much I am going to lose? 10 rupee only. Then shadow price of laborer is 10 rupee. See, it is not labor wages what I am paying. Because of 1 labor, if you miss 1 laborer, how much is the loss? 10 rupee. Because labor is very scarcity in the market. It's not available with us. Or else we can say one more thing. Sir, by getting 1 extra resource, whatever the extra contribution we can get, that is also called a shadow pricing. Both meaning same only, right? Sir, if we can get 1 extra, labor is very scarcity in the market. If we can get 1 extra laborer, how much extra profit you can earn? 10 rupee, because change in contribution is nothing but change in profit, right? If you can earn 10 extra contribution, then it means your profit is 10 extra rupee. Understood, right? By getting 1 extra resource, how much ever the extra contribution you can get it, that is called the shadow price of that particular resource. Shadow price of that particular resource. Understood? Huh? Understood what I am telling you? Shadow price is nothing but 2 definitions we can discuss. Any definition, both definitions give the same answer. So if 1 resource if you are not having, how much you are losing? Laborers. Each laborer we can get 10 rupee. If 1 laborer is missing, then you are losing 10 rupee. Or else, by getting 1 extra resource, how much extra profit you can earn? By getting 1 extra laborer, you can get 10 rupees, right? Anything is fine, any definition is correct. Now tell me what is what is they asking? The shadow price of a skilled labor for SD Limited is currently 10 per hour. What does this mean? What is this meaning they are asking? The cost of obtaining additional skilled labor is 10. No, cost of skilled labor can be anything. Understood, right? But if we add 1 skilled labor, after recovery of the cost of skilled labor, I get extra 10 rupees. Extra profit is 10. That's what it means, right? Next B. There is a hidden cost of 10 for each of skilled labor actively worked. Actively worked, why it is hidden cost? No, if you miss 1 thing, how much we are losing? If actively working means you are already covering, right? Then why there is hidden 10 rupees there? If labor is already worked, it means already we earned it the 10 rupee. Why there is hidden then? Clear? So second bit is also wrong. A contribution will be increased by 10 per hour for extra labor skilled hour can be obtained. If you can obtain one extra skilled labor, you can get 10 extra contribution, they are saying. Yes, it is satisfying one of our two definitions. So C has to be the correct one. And see, if you observe here, there is four MCQs we have seen it. In 4 MCQs, it is very straightforward, and this MCQ it is just straightforward, just meaning of shadow pricing. Meaning of shadow pricing. There is one question, and there is a separate and first of all, this is straight MCQ from your study material. Straight MCQ from your study material. The first thing is we have to do it at least study material MCQs, right? First time చూస్తున్నారా? In exam, you have written only once, right? CA final, CMA final. Then every question is first time only you are looking. Okay. But your textbook is having, right? Why do it's not a straight away new concept? This is not the first time you are looking. Once you open your textbook, shadow pricing, there are three times you can find out shadow pricing concept. In marginal costing, you can find out. Network analysis, you can find out in QT. Same shadow price. Okay, leave it. Understood what is shadow pricing? It can be for any resource by adding one additional resource, additional unit of resource, how much contribution you can get, or else if you lose one resource, how much contribution you are losing, that is also a shadow pricing. So direct meaning. And one more thing, this I will do after completion of target costing. Clear? Okay. Shadow pricing is a bit different from opportunity costing. For opportunity cost, a small difference a thin line difference will be there. What is opportunity cost means? The same skilled labor, if I am not using here, if I use elsewhere, let us say, now from each skilled labor I am getting 10 rupee. The same skilled labor, if I am not using here, if I am using elsewhere, that skilled labor can earn me 8 rupees only. Understood, right? So opportunity cost is always what we can get from the next best alternative. But shadow pricing is not that case. If that resource is not available, what I am losing, or if we can capture that one extra resource, how much extra profit we can capture. Understood, right? What is an opportunity cost means? With the resource already I am having, if not using here, if the same resource, if I can use elsewhere, whatever the amount I can earn, that is called as opportunity cost. Opportunity cost is next best alternative. Shadow pricing is straight away the contribution what I can gain by getting that one extra resource. Mostly shadow pricing will talk when there is scarcity resources. So get one more extra resource so that we can get more profit. If there is no scarcity, then we don't bother about getting one extra things and all. Clear? Okay. So up to this you understood, right? Clear up to this? Okay. I'll do one thing. Let's take 5 minutes break. I will stop this marginal costing and I'll start with relevant costing and all. See, why I discussed up to this at least is, this is required all to discuss all the subparts of our marginal costing. Up to margin of safety is very good enough. So that let me complete relevant costing, product life cycle costing, asset life cycle costing, probabilities. At least these 4 subtopics let me complete it, so that at least 2 questions will be covered. Okay, na? Okay. Okay. See, from now, let us see subparts of marginal costing. This will be very simple. First, listen, each topic will have certain easy components only. There won't be complicated things like regular marginal costing where we are dealing with many formulas. But here we won't deal with many formulas. From this straight away, basic concepts will be there for each subtopic. Let's complete them and let's move to the problems. Clear? Okay. Now, out of that, the first concept is relevant costing. Now, sir, what is this relevant costing? Sir, whenever we get a new order, listen properly, whenever we get a new order, can we accept that order or not? Can we accept that order or not? But while fulfilling that order, we are going to incur many costs. We are going to incur many costs. We just add all the costs. Let us say, if I add all the cost is 10,000. But the particular person, whoever is giving me an order, is telling that I will pay a maximum of 8,000. My cost is 10,000, but he is going to pay me maximum of 8,000. Will you accept this order or not? Definitely we are going to reject it. But we never bother about accounting profit. As marginal costing, we are talking about situational things. But in this 10,000 rupees, material cost alone 6,000 rupees. Material cost is 6,000 rupees. And these raw materials, I have purchased 2 months ago to perform some other order. But suddenly that order got cancelled. Due to the person who is giving me an order, he became an insolvent. He became an insolvent person, so that as his factory might be, let us say, whoever is giving me an order, his own business has collapsed due to some fire accident. So that he called me and says that this is the situation, we cannot take the goods from you. Even if we go for a legal action also, I cannot do anything because already I kept IP in the court. So if once court declared insolvent person, can we ask any obligations from him? No, that would be a crime. We cannot. Got it? So we already purchased raw material. Now I called my supplier for returning back those raw materials. Our supplier told that, sir, yesterday is the last day. 1 week is the time to give it return. See, sir, our agreement is also there. 1 week is the return policy, but you cross that 1 week, we won't take it back. That's what they said. So we thought to hold the raw materials till I can find out someone to buy it as a scrap. To buy it as a scrap. Clear? 6,000 is the raw material. We are buying now to get this, to execute this order, or already we are having such raw material? Already I'm having. Now if I sell the raw material as a scrap, maximum I will get 1,500. Maximum I will get 1,500. Luckily we got one new order where I can use the same raw material. Now how much is the cost of raw material I have to consider? 1,500 only, not 6,000. Because 6,000 is a sunk cost which you already incurred. Yes, you are getting 2,000 loss, definitely. By using the raw material, if you execute the contract, you are going to lose 2,000 rupees. But if you are not executing the contract, the same raw material, you are going to sell it for 1,500 to the outside, where you are getting 4,500 as a loss. Which one will accept? Getting 2,000 loss is better or getting 4,500 loss is better? 2,000 loss is better. Clear? Understood? So, it's not about the cost, it's about the relevant cost. It's about relevant cost to make decision. It means whenever we get a new order, our decisions are not purely based on total cost what we incur, it should be based on relevant cost. Clear? Now, first thing, a cost to be relevant, it has to satisfy 3 things. A cost to be relevant, it has to be satisfying three things. One is variable cost. Clear? Second one, it has to be additional fixed cost. Understood, right? To execute a new order, normally do we incur any additional fixed cost? To execute any new order, usually do you incur any additional fixed cost? No. But that new order is saying that, sir, I want with different specification. To execute order with different specification, we want a small equipment, and I have taken that small equipment for rent of 5,000 rupees. That's nothing but additional fixed cost only because of this order. That can be considered. That can be considered. And third one is opportunity cost. Opportunity cost. And all these things has to be futuristic. All these things has to be futuristic. So listen, I will share this document to you. Yesterday's class document also I have not shared. I forgot actually totally. Okay, I forgot actually. After this class, definitely I will share yesterday's document as well as today's document. You can see this is the relevant cost notes. Clear? I will ask them to share relevant cost notes. Got it? Do not worry about relevant cost notes. First listen quickly, because I want, if you are writing psychologically, I am seeing and I am waiting for some time. Already we are lagging in some time, right? I will give the whole notes. Do not worry, I will ask them to post it in Telegram group definitely. Clear? Concentration on listening. Let's quickly complete it. One topic by one topic by one topic. Let's quickly complete it. Clear? Now, relevant cost. Sir, three things has to be satisfied: variable cost, additional fixed cost, and opportunity cost. And remember, that has to be futuristic. What does it mean? What do you mean by futuristic? That has to be incurred in future. If it is already incurred in past, do not consider that. Do not consider that, because that is a sunk cost. This particular order is not affecting that cash flow. This particular order is not affecting that cash flow. So it has to be futuristic as well as incremental. It has to be futuristic as well as incremental. Clear? Now, these three topics only, let me discuss one by one what are to be considered, what are not to be considered. First one is sunk cost. What is sunk cost? A cost which is already incurred is called as a sunk cost. Ignore that one. Is this new order is affecting that cost? No, because of new order, whatever the cost is incremental for you, only that cost is to be considered for taking a decision whether to add that or not. Clear? So sunk cost is already incurred cost, ignore it. Already, or committed cost. Committed cost. Sir, let us say, before getting this order, I already ordered raw material from our supplier. Before getting this order, new order, I already ordered raw material from the supplier. I have not yet paid. So before getting this order, how do you order the raw material? Because I got some other order and he made me to order raw material. After dispatching of the raw material, he cancelled the order. So the earlier person, whoever is given me an order, he cancelled the order. I thought to give it back to the supplier, but they are non-refundable goods. It means that even though if I get the new order which is using the same raw material, if you are getting or not, definitely I already committed to pay for that raw material. Even that is also a sunk cost. So sunk cost might be already paid or payable in future, but which is already committed. So it is not an incremental one. Because of this order, because of this particular new order, are we increasing any cost? That only we have to consider. If not, if it is already committed, do not consider. Or let me give one more example for committed. Sir, you are having a tiffin center where you are paying a rent of 20,000 rupee. Now you thought to start a tea center just in front of your tiffin center only, where it takes 20% of your space. 20% of your space. And what is the rent per 20% of space? 4,000 rupee. Rent per 20% of the space is 4,000 rupee. And to the master, you have to pay 6,000 rupees per month. All other manufacturing things, variables and all, let us say 10,000 you are going to incur. That is the total cost you are incurring, 20,000. But you analyzed it and you came to know that from a tea center you can maximum get 18,000 rupees revenue. Will you start tea shop or not? Understood the example? What is the total cost of starting a tea shop? 20,000. What is the revenue you are able to generate? 18,000. Can we start tea shop now? Yes, we can start. Why? Because even though if I am not starting this tea shop, still I will pay the same 20,000 rent. I am already running a tiffin shop. In front of that there is some space vacant. In that vacant space I am starting a tea shop. If you start or not, anyhow you have to pay 20,000 rent. Because of starting tea shop, what is incremental cost? 16,000 only. What is our incremental revenue? 18,000. So can we start tea shop or not? Yes. So this is irrelevant. Already committed. If no tea shop also, still I already committed to pay that 20,000 rent. That is just a part of existing fixed cost. So from this example, what I want to tell you is that whenever you are starting up to start a new order or to start a new project, if you are just sharing the existing fixed cost, it is irrelevant. But if you are incurring additional fixed cost just because of starting of this one, that is relevant. Clear? Sharing existing fixed cost is committed cost, so it is irrelevant. But incurring additional fixed cost is irrelevant. Clear? Understood? Okay, that is one point. Sunk cost, committed cost. Second one is opportunity cost. Sir, should we consider opportunity cost or not? Yes, sir, we have to consider it. It means that if I am not starting, if I didn't get this order, or else if I am not doing this order, the resources what I am using to execute this contract, I can use it for some other purpose, right? I can use it for some other purpose. So that is to be relevant for decision making. But let me give an example. Sir, I got a new order. To execute that new order, I want some premises. That's it. It's not about one time order. It's a big order. It's a big order, let us say. To do that, I want some premises. I already had some premises. I have rented out that premises for 3 lakhs. I rented out that premises for 3 lakhs. Okay, that is, let's keep it aside. As we want the premises, I went to our tenant and I politely asked him to get out to do my own business. Clear? Now, I came to know that my incremental revenue by accepting this order is 10 lakhs. But to execute that order, my cost is 8 lakhs. Will you accept that order? Will you accept it? What is the benefit of accepting that order? 2 lakhs. Will you accept it? No. Why? Because revenue is 10 lakhs, cost is 8 lakhs. If I execute that order, I will get 2 lakhs. If I do not accept that order, I can rent out the premises and I can get 3 lakhs. Yes or no? Which is better? Getting 3 lakhs is better, right? So when can we make a proper decision? When we consider these 3 lakhs also a cost, then that will be properly, by accepting that order, you are losing 1 lakh. Yes or no? If you are accepting that order, you are losing 1 lakh or not? Understood? But accounts, P&L account shows you there is a profit of 2 lakhs. But I'm not doing accounts, I'm not here to calculate the profit or loss. I'm here to evaluate whether I can accept a proposal or not. Whether I can accept a proposal or not. Then opportunity cost, notional cost, though it is not considered in P&L account, though it is not considered for calculation of profits, but it has to be considered as relevant cost and add to the total cost to make a decision. Then only you will get a proper decision making. If you ignore it, you may get a wrong decision making. If you ignore it, as you are getting a positive balance, you may tend to accept that order. But by accepting that order, in a real time, you are losing 1 lakh. By accepting the order, yes, the inflow is 2 lakhs. If no accepting the order, your inflow is 3 lakhs. It means because of that order, net effect you lost 1 lakh, right? Got it? If you consider these 3 lakhs only, your net effective answer will be you lost 1 lakh from the order. So opportunity cost is considered for decision making. Clear? Next, third one. Cost savings. Cost savings. Sir, can we consider this cost savings? Yes, we can consider that cost saving. Let us see how it is. Let us say, sir, you wanted to keep a solar to your home. You are evaluating now to have the solar or not. The total cost of solar is 10 lakhs. How do you decide whether to keep it or not? Be solar generating any profit? Or let us say, total cost of solar is 10 lakhs. Clear? You are using that solar to your home and you are able to get some additional units where you are selling that additional units to your neighbor and you are able to generate 4 lakhs as revenue. Now you tell me whether you can start solar or not. Cost of solar is 10 lakhs. Revenue from solar is 4 lakhs. Net cost is 6 lakhs. Will you start this business? Will you start solar system? Why? How is? I'm going to compare with the electricity bills which I am not paying because of this solar. If I am having solar, I need to pay electricity bills, right? So how much will be my savings in electricity bill? That I will consider. With that only I am going to compare it. If my savings in electricity bill is 5 lakhs, I won't start. If my savings in electricity bill is more than 6 lakhs, then I can start. It means that I will consider cost savings as an inflow. Electricity bill savings is not direct inflow to me, but because of the solar system, that money is not going from my pocket. Indirectly, that my pocket is holding that money. So, which I can treat it as inflows. So, cost saving can be treated as inflow, or we can deduct the cost saving from the outflows. Then we can say how much is my net relevant cost. Clear? It is considered. Understood? These 3 points are more than enough for costing purpose. Clear? Sir. Whatever the topic we discussed now, to accept a new order, we have to apply these concepts for materials, labor, overheads, assets, and then only we can make a decision, right? Now, till now, whatever we discussed, if you forget about it and if you are not doing also, it's fine. Now, we are applying these 3 concepts to materials, labor, overheads, missions. This is where you get points in a question. You won't get direct opportunity cost in costing, or you won't get any cost saving from solar things. They won't give you in costing. All these 3 concepts, whatever we learned, that has to be applied for material cost, labor cost, overhead cost, and missions only. Clear? So let me apply those concepts to these 4 things. Got it? And then let's move to problems. It will be very easy if you understood this application part. And this application part usually you will not find in any textbook. Understood? And these things purely made it from questions what they have given. Already we are having some set of questions in your study material, past examination questions and all, right? By observing them, we applied the concepts which is given in textbook for this for the different costs. Clear? Okay, let us see material. Sir, listen. Sir, we got a new order. From this I'll go a little bit slower only. I got a new order. To execute that new order, we want material. So out of total material cost, how much I should consider as relevant and how much I should consider as irrelevant? The final question, how do I solve it? I will get a new order. He will give me some proposal price. If the proposal price is greater than relevant cost, then we can accept it, not the total cost. It means that out of each element of cost, I should know how much is relevant and how much is irrelevant. Understood? So now I just got a new order. To execute that order, I want material, right? If I want material, let us say that material is not in stores. It means that is not with us. What we are going to do now? Obviously, we have to purchase from outside now to execute this order. If you are purchasing now and execute a new order, then definitely that is relevant cost. Because of this order only we are purchasing additionally. So this is the case. Purchase cost is relevant. Clear? Clear. Next, in stores. But material is already available in stores. Then what? Sir, why do we have that material already? Just now I got an order, right? To execute this order, I want material. How can the material can be in stores already? There can be two reasons. That material is a regular material which we are using for some other purpose. It is in regular use. So I went to a storekeeper and I asked storekeeper, can you give me 1000 kgs of that material because I have to execute a new order. Then what the storekeeper says, no sir, I won't give. I wanted to execute, I am from production department. Why you are having stores? Because to give raw material to be to produce different products whenever they do require. What the storekeeper says, no sir, normally we maintain stock here based on ROQ, EOQ, ROL, minimum stock levels and all. I am having this raw material because this raw material is required for some other purpose. So project manager D requested to get this material. For him only we bought it. From him only we bought it. If I give to him, then how can I give for project manager D? If after giving you, after 1 hour or 2 hours later, if project manager D comes, then how can we, what answer I have to give him, sir? So please sir, I cannot give. Then immediately I will go to project manager D and I asked, sir, you asked to buy some raw materials to execute your project or to execute your product. So storekeeper is having that material, can you please give to me? Then he says that, no sir, because I want that material. Sir, I will order Mav itself, but it takes me 3 or 4 days to get delivered. Immediately after getting, I will replace your material in stores. If 3 days, if there is no raw material in stores, is there any effect to your business? I asked to the project manager D. No sir, we are already maintaining safety stock for 5 days because my lead time is 5 days. So already we are having a safety stock for 5 days, sir, you can take it. Pakka 3 days you are going to replace it? Yes sir, definitely. Yes or no? Now what I am going to do? Now listen. The raw material which I am bringing from stores is purchased at 10 rupees per kg. But I ordered a new order to replace it, right? That replacement cost is 8 rupees only. Sir, should I consider as I'm using a raw material which is purchased at 10, should I use 10? Or else, as I'm replacing cost with 8, should I use 8? 8, because 10 is a sunk cost. Because of this order, if there is no this particular order, I might have not purchased it. Because of this order, just for temporary purpose, I borrowed material from some other order. I don't even bother about the price of that one. But to replace that, whatever the cost I'm going to incur is a futuristic cost or even incremental cost. Only that has to be considered. So what should I take here? If this regularly use, it means what? It is using store is having that material for using for some other purpose. So if I take it now, I have to replace it. So that which one I'm supposed to consider? Sir, what is replacement cost means? That's nothing but current market cost. Replacement cost is nothing but if I order today, whatever the cost I can bring it, that is the cost only. Clear? No. Sir, if it is not in use, storekeeper is having that material, but it is not in regular use. But that is not in regular use. Then what, sir? I purchased it long back, but due to some reason, that material is not useful for us. It might be sudden cancellation of an order, or it might be I thought this material will be suitable for some other order, but after purchase only I came to know that that is not suitable there. Got it right? So and I called supplier has not taken back. So I'm holding in stores itself. It is not in use itself. Then what I'm going to do with that one? I'm going to sell as a scrap. That is one thing I can do. Or else, let me take some examples so that you can understand it properly. Let us say I'm having a sweet shop. I got one order. He told very particularly, sir, I want a sweet which is to be prepared using atta, not maida. Regularly we are using maida to prepare one kind of sweet. But the same sweet, as we got a special order, he says that I want only atta. If you want, I give extra money. If I want, I will give extra money. That's what he is telling. Clear? So I purchased 100 kg of atta to execute that order. But while executing that order, 85 kgs I have used it and 50 kgs is excess. It means that due to wrong estimation, I purchased 15 kgs extra. And each kg I purchased it for 50 rupees. Each kg I purchased it for 15 rupees. Okay, this order is executed. I got good amount of money from the particular customer who has given that particular order. Now I got a new order. And he is also saying specifically, I want atta only. Understood, right? If this new order, if you have not got this new order, what we might have done with this 15 kg? Just assume that if I have not got this order, what I might have done? Can I use it for regular use? No, because it's high costly one. My maida cost is only 30 rupees per kg. Understood, right? So I'm not going to use this one. Then what are the options I'm having? Selling it for a scrap. Now there are two options with me. Scrap value per kg is 40 rupees or scrap value per kg is 25 rupees. Then what you are going to do? No, not two options. Let us say if scrap value is 40, what you are going to do? Forget about, there is only one option. My mistake. The thing is that if scrap value is 40, what you are going to do? You are going to sell it as a scrap. If the scrap value is 25, what we can do? At least these 15 kgs, instead of selling it for 25, I can use it for a regular use in the place of maida. Sir, if I use these 15 kg in the place of maida, I can avoid buying 15 kgs of, in the place of maida, if I use it, I can avoid buying 15 kgs of maida, which is at a rate of 30 rupees. Yes or no? Which is more beneficial for us? In the first case, I will sell for 40 rupees and I will buy at 30 rupees maida. Because I am getting scrap more, definitely I am going to use maida only. But in second case, when I am buying the cost is 50, but to sell the cost is only, the price what I can get is only 25. Then what I am going to do? Definitely I will use it for alternative purpose only, not for selling as a scrap. Sir, if you use for alternate use, what is the benefit? You no need to buy 15 kgs of maida at a rate of 30, right? If you sell as a scrap, you are going to get only 25. But if you use in the place of maida, you can save 30 rupees. What you can do? What will you do? Think rationally. Normally, a rational manager or a rational business person, how do they think? Whichever is more beneficial. Whichever is more beneficial. When I get a scrap of 40 rupees, then definitely I will sell as a scrap. Bring 40, keep 10 rupees in your pocket, buy maida for 30. But if you are getting only 25, okay, not required, at least I can use in the place of maida so that I can save 30 rupees. Which one you are going to do? Definitely you can use it for alternate use, right? It means when it is not in use, either you will sell it as a scrap or you will use it in some other alternative use. Understood, right? Out of that, which is relevant I am supposed to consider? If not this order, which one you are going to do? Whichever is higher? So if I have not got this order, out of two options, either selling for a scrap or using in some other alternative use, which one you are going to opt for? Whichever is more beneficial? Yes or no? So now as we got this new order, I am not doing any one of these two. I am using that one in here. I am using that one here. Then how much cost I should consider? At least not 50, because it is not incremental cost. It is a sunk cost because which is already purchased. And because of using here, I am losing any one of this option. Any one of this option which is called as opportunity cost. So if it is not in use, I should take realizable cost or realizable value, which is nothing but scrap value, or benefit from alternative use, whichever is higher. Benefit from alternative use, whichever is higher. Clear? Understood? So for material, this is, check with the question. When you are reading the question, they told that we got a new order. For that new order, we want three material A, B, C. A and B already we are having, C we are not having. C, what should we do? You have to buy it from outside. So straight away, purchase cost to take it. A and B already we are having, but A is in regular use. So take the replacement cost. B, it is not in regular use. Then what I am going to do with B if this order is not executed? Either we sell as a scrap or we use it in alternate use. Out of these two, what you will do? Whichever is more beneficial only. So that whichever is more beneficial is my opportunity cost. Both cannot be my opportunity cost, right? Because of using that raw material in my new order, either I will use scrap value or I will use alternate use. Any one thing I am going to lose. But a rational thinker or a rational business person, what is going to do? He is going to do whichever is higher. So whichever is higher will be an opportunity cost to me. So I will take whichever is higher. At least you can remember this table. If you can remember this table. Not in stock, purchase cost is relevant. In stock, if it is regularly used, then replacement cost is relevant. Replacement cost in the sense current purchase cost. Book value is ignored because it's already sunk, which is already purchased. In books of accounts, whatever the cost is already given, that you have to ignore it because it's already purchased. So it will be a sunk cost. If it is not in regular use, then net realizable value, that's nothing but the sale value, scrap value, or benefit from alternate use, whichever is higher is relevant. Clear? Understood? No. But sir, let me discuss one note point. Sir, for one previous order, I purchased one chemical. 10 kgs I purchased it. For that order, we have used 8 kg. And 8 kg is enough to execute that order. Now 2 kg of that chemical is still left over. That is not in use for any purpose. Any other purpose, that is not in use. Now I thought to dispose it as it is a toxic one. No, see, there is no alternative use. No one is buying as a scrap. But if I keep that chemical in my stores itself, it is going to release toxic gases, which will be very dangerous. So I thought to dispose them. Now for disposing them, cost will be 1000 rupees. For disposing them, cost will be 1000 rupees. Luckily, at that time we got a new order where I can use this chemical. Where I can use that chemical. See, if you have not got this order, what you might have done with that chemical? Dispose and incur a cost of 1000 rupees. Because of this order, we are saving that 1000 rupees. So that is a cost saving. So what should I do with cost saving? Direct it from relevant cost to get net relevant cost. Because already it's giving me a selling price. So this is the offer price I can offer. I'm calculating all the relevant cost. While calculating all relevant costs, I came to know that I saved 1000 rupees because of getting this order, so that I have to deduct this 1000 rupees from the total relevant cost. Total relevant cost, so that I will get net relevant cost, which is to be compared with the sales what I can generate from additional order. So what about the cost of purchase of chemical? That is the sunk cost because I already purchased before getting this order. Understood? Okay. See here. The cost, if the cost incurred to dispose of non-moving or obsolete material, then cost of disposal is deducted from relevant cost. So when such material is used, the disposal cost is saved. So it become relevant benefit. Relevant benefit, which is nothing but cost saving. For example, if toxic one envelope. Clear? And this point already I mentioned you. We have already ordered. The material that has been ordered but not paid, still it is irrelevant only because we already committed to pay. Even if we are not getting this order, still we are committed to pay it, so that is also irrelevant only. The material that has been ordered but not yet received is treated as committed, unavoidable, because we already committed, and therefore it is generally irrelevant for decision making. Then for scarce material, opportunity cost in terms of contribution loss from alternative is relevant. This is nothing but, sir, let us say there is one raw material which is very scarcity to get in market. Stores already having 2 kgs. Store is already having 2 kgs, and these 2 kgs is enough to me to execute the new order. I went to stores. And I'm asking for that material. No sir, this is already purchased for some other purpose. No. Okay then. I thought to ask that particular person to, sir, I will use these 2 kgs now. I will replace it later. No sir, this is very scarcity. This is not available in the market. I called to the market various people who can provide that material. No one says that, no sir, stock is not. Everyone says the same thing. So no sir, stock is not available. So we are not able to get that one. Then I will go to that particular person, whoever is manager. Sir, if you use this material, how much is the profit you can earn for the company? 200 rupees, sir. But I can get 300 rupees, sir. I can get 300 rupees. So it is better. It is better to use by me, because what is our goal? To maximize the profit of the whole organization. It's not about your profit or it's not about my profit. To maximize the profit of an organization. That is so, I will use the whatever the contribution lost by using this raw material from other contract, that contribution lost is taken as opportunity cost and it is considered as relevant. Am I clear? It means, let us say, my offer price is 10,000 rupee. My offer price is 10,000 rupee. Every other cost apart from this material cost is 6,000 rupee. How much is the profit I can get? 4,000 I can get it, right? If I have not yet taken these two kgs. Now for these 2 kgs, if they use these 2 kgs in some other purpose, in some other way, if they are getting 3,000 profit, instead of using there, if I use it, what will be my total cost? What will be my total cost? 9,000. After recovery of this 3,000 cost, 3,000 revenue, what they can get it from outside, on and above that revenue, still I can get 1,000 rupees, right? So, it is better to use by us only. Yes or no? Clear? So, what I am saying is that, if this 2 kg is used by us, some other order cannot be executed. If some other contract is not executed, they will lose 3,000 rupee. They will lose 3,000 rupee. No problem, sir. I will try to cover that 3,000 also, give it to me. I have taken the 3,000 as a cost to cover that one. After covering the 3,000, still if I am able to get 1,000 rupees, means it is better to use by us only. Sir, if he is not giving that material, if I am not using, how much is the profit he will get? 3,000. If I use it, I can get 4,000 rupees, right? If that material is used by us, that will be 4,000 rupees, right? Clear? So it is better to use by us only. So whatever the contribution we are losing from the alternative purpose, that contribution is to be used as cost for us. So let us say here cost is 8,000. Apart from this material, my cost is 8,000. Now this material, as I am stopping from somewhere and I am using, 3,000 is the cost. What is my total cost? 11,000. It means I am getting -2,000. It is better to not to use that material. Ask them to use it. Ask them to use it. Why? Because if I try to cover the 3,000, I am getting 1,000 rupees less. Though it is profitable to us, but after considering that opportunity cost into consideration, I am getting -1,000. Is simply how much is the margin I am getting? 2,000 only. How much is the margin others outside they can get? 3,000. It means if I use that 1,000 less we are getting, right? So that is what. So it means that if we consider that opportunity cost, our decision making will get correct. It means that, sir, if I use that raw material, our organization will lose 1,000. Please use by yourself. In earlier case, sir, if I use the 3,000, sir, if I use the raw material, after covering the 3,000, additional I can give 1,000 more rupees to the organization. So it is beneficial, so that I will use it. Understood? So consider their opportunity cost, so their contribution as opportunity cost, and try to cover from here. After covering that, still if you are getting a positive, accept it. Otherwise, reject it. Clear? Understood? Okay. So that's about material. Understood about material? Can we solve only based on material once? So that let's check whether you are confident or not. Check problem, see problem number 1. Sir, for an offer, find the relevant cost of material from the following data. I want material A. How many units require? 1200. Out of 1200, how much is already we are having? 700. What is additional quantity required? That 500 definitely have to purchase newly. What is the new market price? That's replacement cost. So realizable value is the scrap value. Book value means that is the cost already we purchased for this 700. See, replacement cost in the sense today's market price. Sir, one more thing. If it is not in stock, which one I am supposed to use it? Today's purchase cost. If it is already regular used, what I am supposed to use? Replacement cost. But replacement cost is nothing but today's purchase cost only. If it is for this both purpose, I have to use the same cost only. Because replacement cost in the sense today's market price only, right? If I have to buy newly or if I have to replace it, anyhow I have to place an order today itself. So in question, whenever they give only replacement cost, that is nothing but current market price. Sir, what is book value per unit means? Already we are having 700 stock, right? That was purchased for 35 earlier. And first of all, you never use this column. Why? That will be a sunk cost. We never use this column. Anywhere we never use that column. Clear? Realizable value means if you are selling this as a scrap, how much you can get it now? Realizable replacement value means if you buy it today, now how much will be the cost? Clear up, first of all, understood the meanings, right? Now see here. How much is the material I want? 1200 is the stock which I do require. Out of that, 700 is already available. Forget about the availability of the stock. Remaining 500 definitely have to buy it from outside. Then 500 into 60. Definitely that has to be relevant. Okay. Then what about the 700, sir? Let's read the question. Material A and B is used regularly. And if the stocks are required for this job, they would need to be replaced to meet another production. As it is regular use, even though if you use it now, you have to replace it immediately by placing an order. It means if you are placing an order, how much should be the cost? 60. It means for the whole 1200, it has to be 60 only. For the whole 1200, it has to be relevant cost is 60 only. Clear? Understood? Okay. Next B. Sir, I want 1350. I already had 1600. It means I don't need to buy any new things. But B is also regularly using one. Even though if I use it now, immediately I have to replace it. It means I have to buy it from outside. If I have to replace it, what is my cost? 45 only. So that 1350 into 45 has to be considered as relevant. Easy enough. 1350 I have to recover. I want 1350. 1350, though I am having 1600, if I use it from that 1600 also, I have to replace it immediately because it is regular stock for some other purpose. If I am not replacing, some other person manager will come and turn that botcon. Understood, right? So definitely I have to replace it. So if I have to replace it now, I have to buy it 45 only. So 45 has to be my replacement cost. Clear? Relevant cost is 45. Next, C. I want 800. 700 already I am having. Definitely 100 I have to buy it at least. What is the relevant cost for that 100 units? That has to be 40. Then let's talk about remaining 700. What about the 700? Material C and D are as a result of over purchase. It means that is not in use. Not in use. Realizable value or alternative use, benefit from alternative use, whichever is higher. Got it right? Sir, if they given only realizable value, then there is no alternative. That is the reason why they have not given. Sir, if they have given only alternate use, then it might be no one is ready to buy it as a scrap. Then you have to take alternate use only. But if they are given both, whichever is higher only, I have to take it. Clear? Now what do they see here? C has no other use, no alternate use. Then definitely only scrap there, right? Then what is an opportunity cost for this 700? 25. So what is total now? 100 into 40 plus 700 into 25. That has to be relevant. Clear? See? 700 into 25, 100 into 40. So So totally 21,500 has to be relevant. Clear? But actually we purchased the 700 for 30. What is that is sunk cost. Do not bother about it. If you consider that 30, we may tend to take wrong decision making. So if it has to be a relevant cost, it has to be a futuristic. In future you are supposed to incur. In past if you are incurring, ignore it. And at least if it is not a futuristic, it has to be an opportunity. Clear? Okay. Next, 200 I want D. 160 already I am having. It means 40 definitely I have to buy it at a rate of 19. Now what about remaining 160? See here. But D could be used in some other job as substitute demand for 350 units of material P, which would currently cost 4.5 per unit. Sir, there is some other unit where they have to buy 350 units of P at a cost of 4.5 per unit. But in the place of this 350 units, this 160 stock is enough. Possible, right? Sometimes in the place of 2 kg of one material, 1 kg might be enough of some other material. Yes or no? Because of its unique feature, small number of quantities required. First, what does question tell? In the place of the 350, this 160 is enough. Don't question the question. Understood, right? This 160 is enough. They are saying that if I use this 160 for alternative purpose, what is my benefit? How much I can save? 350 into 4.5, I can save it. How much it will be? 1575. Now, what is the scrap value for that? 160 into 6? 960. Now, which one I am supposed to select? Obviously, whichever is higher. 40 into 19 plus 1575 has to be relevant. Clear? What is 40 into 19? 760 plus 1575. 2335. Clear? Understood? Okay, next. Okay, next see, sir. E. We want 400. Already we are having 500. It means I don't need to buy any new thing. Let's check it. Why we are having that one? Whenever we are already having existence, we have to check it whether it is regular use or whether it is not in regular use. Now, material E and F are toxic materials. Was purchased for a separate contract, not accepted. It was purchased for some other contract, but later it was not accepted. It is idle now. It should be disposed of at a cost of 3,500 and 8,000 respectively if not used in this contract. Luckily we got a contract. If you have not got this contract, what you might have done with that material? Disposed of by incurring cost for us. It means by using this material, for the new order, we can save cost, right? Then it has to be a cost saving that has to be deducted from relevant cost. Clear? Now see, how much extra we are having? 500, but I can use it only 400. It means still that remaining 100 they have to dispose it outright. Sir, is the disposing cost is fixed or variable? It can be anything. It can be fixed or it can be variable. Sir, I have asked some other person to dispose of. I'm not good at disposing, but some other person is very good at disposing. So I called him and says that, so irrespective of the kgs, I have to dig the same pit, so that if I have to place there, my cost, you have to give me a wages of 3,500. Then it has to be a variable. Instead of that, no sir, per kg, you give me this much of the amount, then it has to be a variable. But did question mentions as whether it is variable or fixed? No. So when question is not mentioning, based on past questions, they are taking it as variable. That we have to remember. Understood? Still 100 we have to dispose it, right? What is the cost of disposing for 500 units? 3,500 by 100. How much you are saving? Only 400 part only we are saving. 100 part still they have to dispose it. As it is a variable, proportionate cost I have to consider as relevant cost. Sir, if you ignore that one and make a note saying that it is a fixed cost, so I have not taken. Because I didn't save anything, right? Even 100 kgs if they have to dispose, if the cost is same, as I didn't save anything, I cannot take it as relevant cost or relevant benefit. Understood? But based on past questions, in examination for CMA exams, they are considering it as variable when question is silent about it. So consider as variable, that will be better actually. Clear? So how much it has to be? 2,800. That will be a saving. 200, 800 has to be a saving. So 200, 800 deduct it from the relevant cost because it's a benefit, right? Understood? Then what about this? I require 360, but already I'm having 300. The extra 60 anyhow I have to buy it from outside, which cost is 60 into 67. But these 300 I am saving from incurring cost of 800, so 8,000. 8,000 is a cost saving, and what is additional cost for us? 60 into 67. 4,020. Then what is my net cost saving? 3,980. Saving it is, so negative. 3,980 negative. These two are cost savings. So add these and deduct these two things and take this net cost, and it is relevant material cost. Easier. So if you understood this question, in any problem if they give materials adjustment, you can do it because it covered everything. What it already not in existence, we have to buy it, they have covered. If it is inexistent, whether it is regular use or not regular use, they covered. If it is not in regular use, scrap value or benefit from alternate use, whichever is higher, they covered. Toxic metal they covered. Every point which we discussed in metal they have covered. It means in relevant costing in 14 marks question, if they give materials adjustment, metal adjustment is done. Understood? Clear? Okay. Now metal is done. Now labor. Sir, remember, you got a new order. To execute that new order, I do require a labor. So labor, no idle labor. We are having no idle labor. So what should we do? We should hire new labor. You have to hire new labor, or else let us say I got a new order. To execute that new order, I have to recruit new labor. It means to execute this order only I am recruiting new labor. Whatever the wages I pay has to be relevant only, additional cost only. So wages paid is relevant. Clear? It's very simple. Like material, if we are not having material, we are going to buy newly, so purchase price is relevant. Likewise material, labor, we don't have labor, so we are hiring new labor to execute this order. So whatever the wages I pay, that will be relevant. Clear? Now using existing labor. Clear? There are two things. Either we are having idle time. Sir, what do you mean by having idle time? It means that yes, we are having existing labor. Existing labor is having only 60% of the work. 40% of the work anyhow they are vacant only. Understood? I hired two labor. but I'm not able to give full work to the 2 labor because of lower work in my factory. But 2 labor is required to me, because to use that 60% capacity also, at least I should give a labor, I should want labor, right? But I cannot find out part-time labor, so I recruited full-time labor, and I'm paying regular full wages. I'm paying, even though I cannot give the work, still I have to pay full wages, right? Understood? So let us say if I work as a faculty in any institute as a full-time faculty, monthly salaried faculty, in some months, let us say I'm taking intermediate classes, MAC, CEC. I'm a full-time faculty in one of the institute, let us say. Will I have any work in March and April? Summer holidays, right? But still they have to pay me fees. Understood, right? In April, they started one short-term course, and they wanted to fix the course fee for that short-term course, and they're asking me to take that short-term courses, and they're not paying me any extra amount. Why? Because anyhow they are paying salary on April also. Understood, right? Though I didn't like it, but still I have to work because I'm getting salary. Yes or no? Now, whenever they are thinking to start this course or not, do they consider my salary into consideration to evaluate whether to start the course or not? No, right? Because if they start the course or not they start the course, they have to pay me a salary. So my salary is irrelevant because it's already committed. It's already committed. So committed cost has to be ignored. We discussed, right? So if you're having idle time, if we are asking them to work on this particular new order, then relevant cost is no relevant. There is no relevant cost. No relevant cost per labor. Clear? Now, having no idle time. Having no idle time. Then what, sir? I'm using my existing labor only, but there is no idle time with him. Then how can I make my labor to work on this order? I have to ask him to stop to work on some other order. Understood? Let me take one example. Sir is already in some other order, where I'm talking about some other order. Other order. Sales is 10,000. And when we deduct variable cost, material cost is 4,000. Labor cost is 3,000. What is my contribution? $3,000 is the contribution. In fixed cost, ignore it because it's irrelevant. Because if we continue the existing order, or if we ask them to stop and work on this order, any of the fixed cost is same, forget about the fixed cost. Clear? Now you tell me, if I asking him to stop this order, if I'm asking him to stop this order, how much I am losing? 3,000 I am losing. Sir, see, first thing, this sales I will lose it, definitely, and this material I no need to use it, but this wages I am supposed to pay it. Yes or no? Because if he execute on, if he use it, if he is working on existing order, or if I am asking him to work on a new order, still I have to pay wages of 3,000 only. Yes or no? So I have to pay that 3,000 as well as I have to cover extra 3,000 rupees, because as I am stopping some other work to execute this order, this 3,000 will be an opportunity cost to me. Opportunity cost is considered, right? So what should be the relevant cost here? Wages plus contribution foregone from other order. Logically understood or not? Sir, simply I'm asked, sir, if I cover only 3,000, if let us say, if I cover only 3,000, after getting the 3,000, now labor will come. Sir, where is my 3000? Okay, take this. How much I'm going to have in my hand now? 0. Sir, I thought to cover only these 3000 rupees, thinking that I lost just 3000 rupees. Understood? By after covering these 3000 rupees, I thought to have 2000 rupees margin, and I've collected total 5000 rupees from the new order. After collecting 5000, now labor came. Sir, where is my 3000? Then we realized it. We left over with only 2000 because anyhow we have to pay 3000. This material I don't need to incur, right? If I stop other order, material don't bother about it because you are not going to incur that one. But labor, anyhow you have to pay wages of 3000, right? It means how much you are supposed to cover now? To pay wages as earlier, 3000 I have to cover, as well as opportunity cost I am losing 3000, that also I have to cover. If both are covered only, then only I will left over with. If I cover 6000 only from the new order, I can pay 3000 from the, I can pay 3000 from that 6000 to the labor, and how much is left over? 3000. From other order also 3000, this order also 3000. It means on and above that only I should get it right. So 6000 rupees has to be the relevant cost. Clear? That's about labor. Easy? Labor. When we got a new order, we want a labor for that. We are not using existing labor. We are hiring a new labor. Then whatever the wages you pay, consider as relevant. We are using existing one. But there are two conditions. One, either you can use idle time of them. If you are using idle time of them, are we paying any additional wages? No. So nothing is relevant. But if you are asking him to stop on some other work and work on upon some other product, then your opportunity cost has to be wages plus contribution foregone. Wages plus opportunity cost are relevant. Opportunity cost is nothing but contribution foregone. Both are relevant. Clear? Understood? Okay. Sir, let us say to execute a new order, I want 50 hours of labor. That's it. They have not mentioned about anything. Are we using existing one or we are hiring new one? If question is silent about it, it means that we are hiring a new one. Because if they are using existing one, they have to tell whether it is idle capacity or not idle capacity. If nothing is mentioned, I want 50 hours of labor, if they are saying, it means we are hiring new people here. If nothing specified in question, labor assume it to be newly employed and wages paid is treated as relevant for decision making. Clear? Understood about labor. Next, overheads. So today itself you complete all the relevant costing questions. I definitely assure that these questions will be easy. Do not read all these things. Opportunity cost, nothing, don't require, not required. Just application of above concepts for material, labor, overheads and missions. Just read them. Because all these concepts, see, I got a new order means what will be the cost we are going to incur. Whenever I get a new order, what are the costs we are going to incur? Material, labor, overheads, direct cost, indirect cost, material, labor, overheads, as well as sometimes we want some missions, extra missions to work upon that new order. All the above concepts I already applied it in various other elements of cost. I segregated that. If they give like this, consider it like this. Now we're done with material question, right? Do you bother about sunk cost or do you bother about any other thing? Nothing. The table you have seen there, particularly buying a new order, particularly buying for this order. So take relevant cost. Replacement. Take replacement cost. If it is already in existence due to over purchase earlier, so not in use, so scrap value or alternative benefit whichever is higher. So just learn this table, that's enough. And the table also we are defining very logically. And do not by heart that one, just learn it somewhat logically and apply that in questions. Definitely the questions has to be very easy. Got it? So getting question from relevant costing, either it might be 7 marks question or 14 marks question, you have to get full marks. Clear? Because it is one of the easiest topic. Relevant costing is easiest topic. By understanding the 4 tables, it's fine. Clear? Okay. Now overheads. There will be two type of overheads. One is variable. Sir, variable overheads means extra cost by accepting this order. Always relevant. Variable in the sense additional cost for additional order. So always it is relevant. Fixed cost, fixed overhead. Already we discussed earlier. Sharing from existing cost. No relevant. Additional fixed cost. For this particular order, I had to have some additional fixed cost. Then it is relevant. Clear? So they will give different names for this, calling it as absorbed overhead. Absorbed in the sense already having things, some portion we absorbed for this new order. Absorbed overhead, committed overhead, unavoidable overhead. Unavoidable means if you accept this order or not, still you have to pay that expense. That is what unavoidable. Then all comes under one same category, they are irrelevant. Now additional fixed cost and avoidable, it means that if you are not accepting this order, you can avoid that fixed cost. What does it mean? If by accepting this order only we are incurring additional one, right? So additional fixed cost, avoidable fixed cost, or else we can say traceable fixed cost. Traceable means only for this purpose we are incurring a fixed cost. Traceable fixed cost, any such things are given, take it as relevant. So I have given the other names also. Variable overheads, always relevant. Fixed overheads, allocated overhead. Allocated in the sense existing one you are using, irrelevant. Allocated, absorbed, recovered, or existing overheads are already incurred cost and hence are irrelevant for decision making. Any one of these words they give. Allocated, absorbed, recovered, existing overheads. Then additional overhead relevant. What are additional? Additional, specific overhead, traceable overheads are the future costs that arise due to a decision and they are relevant for decision making. Clear? Sir, if nothing mentioned about fixed overhead, always think that it is shared from an existing one. From marginal costing, in the first 1 hour of marginal costing also I said you the same thing. Fixed cost, nothing mentioned, no additional, existing one only. If there is any additional things for fixed cost, they specifically mentions us. And variable cost definitely it will be always additional only. Nothing mentioned about fixed. Nothing mentioned about fixed. Always it is shared from existing one. We are not any incurring new thing. Understood, right? Question says that there is a fixed cost to execute this order. But sir, is that existing fixed cost we are sharing or it is a new fixed cost? Nothing mentioned, treat it as existing one and ignore that one. Ignore that. Clear? Clear about overheads? Okay. Next. Mission. Sir, I got a new order. To execute that new order, I want missionary. To execute that new order, I want a missionary. Clear? Now, sir, no availability. If no availability, then what should you do? Let's say to execute that order, it takes 2 months. If you sell it, you are going to get 1,80,000. That's what someone said. Now, which one you are going to opt for? Obviously, whichever is lower, to net purchase. But if the realizable cost is only 1,60,000, then rent. Simply rent or net purchase cost, whichever is lower. What is net purchase cost? Purchase it now. After completion of the order, whatever your realizable value, deduct it and find out net purchase cost. And then among this one, whichever is lower, you can take it. Clear? Okay. Now, machine is available. Then how? Machine is available with the company, but that machine is regular use. Regular use. That is no vacant. It is already regularly using. What it, let's say this machinery is using by some other manager to produce product D. I went to that manager, sir, I got a new order. As that is an urgent order, very badly I have to start now itself. Can you give me your machinery? No, definitely not, because I have to work upon that. Sir, are you having any additional safety stock of finished goods? Yeah, I'm having, because even sometimes uncertainties happen. If 1 or 2 weeks, if something happens to the organization, still I have to meet my supply, right? So that is the reason why I maintain some additional stock in my godown. Sir, if your order is, if your manufacturing is halt for 4 days, is there any impact for you? No impact, because I already having sufficient safety stock of finished goods. Because whenever we get sudden order, we normally manufacture some additional unit and keep it in godown, right? Yes or no? I'm having sufficiently. So do one thing, give me your machinery. I will order now itself and I will replace it immediately. Like machinery, like material only. Understood, right? So it has to be replacement cost. But do I want machinery for a long period? No, I will replace it, but immediately after usage, what I am going to do with this machinery? I will resell it. So it has to be fall in replacement cost. Fall in replacement cost is nothing but, again same, purchase cost minus resale value. Like material also, these two will take the same answers. Here also these two will take the same answers. Clear? Understood? But if it is not in use, what I am going to do with this machinery if it is not in use? I will try to sell it as a scrap. Let us say I got a new order. For this order, I want one machinery. And some other manager told me that, sir, this machinery is already available with us. I think you can use that machinery. So with whom it is available? Sir, with repairs and maintenance department is having all these scrapped machines. We can go and ask them once. When I went to them, they are in conversation with some other party. They are about to sell it as a scrap because it's not in use, right? Understood, right? And immediately I stopped it. No, I want this one. And what is repair? I asked him to repairs and maintenance department. If you sell it today, how much you can get? 80,000 rupees, sir. Okay, but to execute this order, I want 3 months. I will use this machinery 3 months and I will give it to you. I will give it to back. Sir, but I cannot sell it for 80,000 because it will become a little bit older. I can get maximum 60,000 rupees only. Then what is the relevant cost for this order? Because of this order, my cost is 20,000 only. Because if there is no order, let us say we didn't get this new order, at what price I might have sold it? 80,000. But still I can get 60,000, right? Because of this order, how much is my opportunity cost missed? 20,000. So that is nothing but fall in realizable value or resale value, whatever it is. Fall in realizable value, fall in scrap value. So it is same as material only. Material means it is already consumed. So it is directly you take it replacement cost or realizable value. But it is a mission, right? We cannot consume all the mission, right? So we will use it and after use it again we can sell it, right? So that fall in replacement, fall in realizable. So all this mission is same as material. Material not in use, purchase it. Now also I can purchase it, but I can sell it once again. I can sell it immediately. So net cost only you can take it. But for mission I have one more option that I can rent it. So whichever is lower you take it. And for material regular use, replacement. For mission regular use, fall in replacement. Clear? Then for material not in use, scrap value or any other usage, alternate usage, whichever is higher. Benefit from alternate usage, whichever is higher. But here, fall in realizable value, resale value. Clear? Understood? Okay. Can we move to problems now? With these 4 tables, I think we can solve every relevant costing problem. Understood all 4 tables? Clear? Now, just 2 miscellaneous points we are having. Let us see that one. Sir, why marginal costing? First thing, why marginal costing? Short-term decision making. Short-term decision making. So in previous examination, in one time, they given one question that in future, the price can increase by 20%, so that keep some provision aside now itself. That's what they given in question. Sir, that is okay, that is for accounts you created a provision. But for costing, now to accept a new order or not, okay. So now to accept a new order or not, what should we do? Should we bother about creating a provision? Sir, let me give, sorry, I was disconnected because something pop-up came here. Okay, I will explain 1 second, listen. Sir, now I got a new order. To that order, material cost is 20 rupees. Material cost is 20 rupees. And that is a regular used material only. That is a regularly used material, but now the material cost is 20 only. But for future orders, as they're expecting material cost is going to be increased by 20%, accounts team has created some provision aside. Because in future, whenever they want money, suddenly they have to get it right. So they kept a provision aside. Now for this order, that provision, extra money, whatever we kept aside, can be considered as relevant cost? No, definitely no. Because is material increased now? No, in future orders only. But in costing, every order is evaluated whether to accept it or not. Now for this order, so when it is increased, then I will evaluate once again. Understanding? When it is really increased, then I am going to evaluate once again whether to accept that order or not. Now, because marginal costing is a short-term thing, balance sheet is a long-term thing, so they created a provision. Forget about the accounting team. But in question, they says that provision is created. Provision is created for increase in price. 5% provision is created for incremental price, or 5% additional cost is kept aside for incremental, future expected incremental things. Never consider that in costing. But in future only it is going to be increased, right? When it is really increased, at that time, when we are talking about the new order, further order when you are taking, that order definitely you are going to do once again evaluation whether to accept a particular order or not, right? Because every order we get, we are going to evaluate whether we can accept that order or not by considering what is the price what he can offer and what is my relevant cost to execute the contract. Am I clear? So future provisions, ignore it, because marginal costing is always situational decision making. This situation, what is your decision? When any situation is changing, again you are going to do again analysis, again decision making analysis, you are going to do it later, right? That's it. See here. Provision for expected increase in cost is generally ignored in relevant costing unless it represents a real incremental cost, as only actual additional costs are considered for decision making. So provision is not equal to actual cost. Ignore it. Clear? Sometimes they may ask you like this. You got a new order, but they have not given order value, order price. It means that how much the particular customer is offering you. But now they are asking you what should be the minimum price to be placed. And what should be the minimum price? That should be the relevant cost only, total relevant cost. But to execute that order, how much is the cost you are going to incur? That is the minimum price. On and above that, anything you can accept. See, that is not the price. But they are asking what should be the minimum price. Whenever such question is given, calculate the total relevant cost. Under that, you write it a statement. Therefore, the minimum acceptable price from this order is equal to total relevant cost. Clear? So, when question asks for minimum price for accepting an order, the total relevant cost is considered, as the price must be at least to cover all relevant costs. So, therefore, minimum price is equal to total relevant cost. Clear? Okay. See, relevant cost is there in your inter also, but their relevant is only to the extent of variable cost. What they give is that existing order is there, existing you are already manufacturing 20,000 units, but suddenly you got a new order for additional 2,000 units, but is not giving regular selling price is giving only less selling price, will you accept it or not? It means there in enter what you do, you just calculate variable cost. If the selling price is more than variable cost, accept it, because they didn't introduce all these kind of things, but in final to the same problem, to extension, they are giving additional things. Understood? All the four tables are understood, right? Okay. See problem number 2. So, Tip Top Textiles manufacture a wide range of fashion fabrics. The company is considering whether to add a further product superb to the range. They're evaluating a new product whether it can be added or not. A market research survey recently undertaken at a cost of 50,000 suggests that demand of super will last for only 1 year. Sir, while calculating the total cost, can I take this 50,000? That's what each and every time whenever we get a cost, can we take it or not? If you can take it, how much it is? That's what relevant costing, right? So just to go with the flow of the question, read everything. First cost you got it. Can we take it or not? Evaluate it. If no, ignore it. If yes, how much it is? We may not be same amount what we spent. Got it right? Because what we spend might be the sunk cost, so that we have to consider the relevant only. First thing. The market research survey recently undertaken at a cost of 50,000 suggests that the demand for super will be 1 year. Now I wanted to make a decision whether to start super or not. Clear? So before taking the decision itself, I already completed market research. See, I already spent this 50,000. That has to be sunk cost, so it is irrelevant. Sir, let us take one example. Sir, you are doing very good business in Hyderabad. Now you thought to expand this one to New Delhi, but we don't know states and preferences of the New Delhi people. So I went to New Delhi, and my flight cost to fly to New Delhi is 5,000 rupees, let us say. Now I met one market researcher and I asked him, sir, take these samples and give me a report whether I can start this business here or not. Understood, right? Do you think that immediately he can accept it? No. When he will accept it, he says, sir, take 150,000 bundle, keep it on my table, I will do it. That's what he said. So we have given 50,000 rupees to him, and he came back again 5,000. Just to expand this business, just to know whether we can expand this business or not, I already spent 60,000 rupees. After a week, I got a mail from him, and based on the report, I have to decide whether to start business or not. Let us say, based on that report, it says that no, not to start business because that is not a good market for your product. Or else, yes, you can start a thing. Any decision you take it, the 60,000 is not going to be getting back, right? If you take up or not, still it is irrelevant for you. Understood? Or else, to make you to better understanding, after opening that report, I came to know that for only 1 year we can sell it. 1 year total I can get 10 lakh sales. And after considering every cost I incur, furthermore, every cost I incur, I came to know that I will incur 9,70,000 rupees. I will incur 9,70,000 manufacturing cost, transportation to New Delhi, sales and distribution expenses in New Delhi, everything, whatnot, every cost I incurred. Even to manufacture these additional products, I want some capital. I included cost of capital also. After including cost of capital also, my total cost is 9,70,000. What is my benefit? 30,000. To get 30,000 benefit, I already spent 60,000 rupees. Will you start this business or not? Or will you expand this to the New Delhi or not? Will you expand it or not? First of all, understanding what I'm asking. Got it right. I did some market research. After opening that market research, it came to know that my profit the profit which I can generate is 30,000 only. Will you start it or not? Yes, definitely we can start. Because if we do not stop, our loss is 60. If we start, our loss is 30. Getting 30, see, again I am saying profit, do not keep profit in your mind. Can we take up the project or not? Sir, this 60,000 is already incurred. If you start that particular, or if you expand your business to New Delhi or not, that 60,000 already spent it. But if you expand now, at least you can cover 30,000 rupees, right? So you have taken every possible cost. You have taken every possible cost. Understood or not? Sir, if you are not expanding, if you are stopping there, if you call to market researcher, sir, as we are not going to start it, can you give back my 60,000? Sir, 50,000. And I called Air India, sir, to start or not, sir, to expand my product or not, only I traveled, sir. I'm not going to expand that one. Can you please give it back my ticket price? Will they give you? Understanding. Or else any cost which is incurred before decision making is a sunk cost. Ignore it. Understood, right? To make decision only you spend that cost. Understood, right? Whether to start or not, to get a result only I have spent that 60,000 rupee. That is a sunk cost, right? Understood or not? Clear? So 1 second, keep on calling. Class lo nam class ay chestam. Clear? Sir, a market research survey undertaken, already taken. So it is a sunk cost, so ignore it. That's what I can tell now. Understood? Any cost which is incurred before decision making is a sunk cost. You have not yet taken decision, but already incurred 50,000 rupees. Ignore it. Only incremental cost only I am supposed to consider it. Next what? Suggest that demand will last for only 1 year, during which 50,000 units could be sold. That is a future thing. Could be sold at a rate of 25. So what is your revenue generating capacity? 50,000 into 25, which is 12 lakh 50,000. That is revenue. That revenue have to compare with the relevant cost. The production and sales of Superb would take place evenly throughout the year. Evenly, sir, you already spent this market research just to know how many units you can sell at what price only. And you came to know that it was 12 lakh 50,000. So if your total cost is 12 lakh 30, how much is the margin you can get? Only 20,000. Only 20,000, still do it. Then what is the net loss or benefit? Net loss is 30,000. But if you are not starting, your net loss will be 50,000, right? Understood? If you are saying that no, I have not covered at least my market research cost, why should I start it? Then how much will be your loss? 50,000, because we are not going to get that market research cost, right? So ignore that one. So do not consider that cost into total cost, because it's a sunk cost. Okay. Now the following information is available regarding the cost of manufacturing Superb. Now they are given raw material separately, labor separately, machinery separately, overheads separately. We have taken 5 tables or 4 tables, right? 4 tables, apply individually and make a decision. That's it. Every relevant cost question will be like this only. They will talk about material, labor, overheads, machinery. Treat it as 4 small questions. Do not treat it as 14 marks very big question. Treat it as 4 small questions. Definitely it will be easy for you. Clear? Now see materials what they are given. Sir, each superb would require three type of material: wash, flash, splash. Quantities required, current stock levels and cost of each material are given below. Now see, wash is used regularly by the company and the stock are replaced as and when they used. It means that if you see posh, what is material required per unit? 1. So how many units will you require then? 50,000. What is already in stock? 1 lakh. But as it is regularly in used, if we use this 50,000 from this 1 lakh, what should we do? We should replace. Then what is my replacement cost? 2.5. So for posh, what should be the relevant cost? 50,000 into 2.5. So how much it will be? 1,25,000. Clear? So next one. The current stock of flash is as a result of overbuying of an earlier contract. This material is not used regularly by Tip Top Textiles, and any stock was not used by manufacturer would be sold it. So no other uses also, they are going to sell it. Now how much stock they want? Total 1 lakh units. Out of that 1,60,000 already they are having. It means for flash 40,000 definitely they would buy it from outside now at a price of 2.8 plus 60,000 as it is additional stock. Anyhow we are going to sell it as a scrap. Then I have to consider resale value as relevant, which is 1.1. So 60,000 into 1.1. That has to be relevant cost. Easy, right? How much it is? 1,78,000. Next one. So the company does not carry a stock of splash and the units required to be specially purchased. Splash 0, nothing stock is there. Anyhow we have to buy it from outside now. How much will you require? 25,000 units. So 25,000 into 5. Current replacement cost is nothing but current cost only. So that will be 5. So it has to be splash 25,000 into 50. 50 only, right? 5, sorry. 5. How much it will be? So what is total relevant cost of material? 4,28,000 has to be the total relevant cost of material. Clear? Okay. Then next, labor. See sir, production of each soap would require a quarter of an hour of skilled labor. It means that for each labor skilled, how many skilled workers they do require? So for 50,000 units, each unit requires 1/4 hour. Each require 1/4 hour. Clear? Okay, up to this is okay. Then what do they spend? Understood? Each skilled labor requires 1/4 hour only. Quarter of an hour. Okay, next. And 2 hours of unskilled labor. So how much unskilled labor would you require? 50,000 into 2 hours. Then in addition, one foreman would be required to devote all his working time for 1 year in supervision of the production of superb. He is currently paid an annual salary of 1,50,000. So we want one supervisor also. Supervisor, his currently wages is 1,50,000. Currently paid is relevant. Irrelevant. Because of getting this order, are we paying 1,50,000? No, it's already paying 1,50,000, they said. If they give any additional points according to that, let us calculate. As of now, just keep it aside. Understood? So existing one, if you are using, then we have to apply some other concepts, right? Let us see that. That is an existing labor. That's it. We can identify. In addition, one foreman is deviated. All his work time for 1 year in supervision of the production of super. He is currently paid annual salary. It means that he is already an existing employee. That is what as of now. Later you can see that one. Clear whatever they are discussing about that. But this 1,50,000 do not take it because that is already committed. As it is already a existing supervisor, even though he is not working here, still currently we are paying 1,50,000, right? Okay. Further going forward, let us check. Now, Tip Top Textile is currently finding very difficult to get a skilled labor. Now, the skilled workers need to manufacture soap would be transferred from another job which they are earning a contribution of 4.5 per hour. Understood, right? 4.5 per hour, comparing a sales of 40 less skilled labor wages. Sorry, sales revenue is 40 less skilled labor wages of 30 and other variable cost of 5.5. It means we are asking labor to stop some other work and coming here. Understood, right? Then what should be our relevant cost? Contribution foregone as well as wages, both, right? Yes or no? Both. This is from here, having no idle time. We're asking them to stop some other work. So wages we have to cover. Because even if we're asking them to stop, still we have to cover wages. So wages plus contribution foregone. So how much is wages per hour? See here. This sales revenue is 30 less skilled labor wages of 30 and other variable cost of 5.5. So 40 minus 30 minus 4, 5.5 is 4.5. Remember the example. Other variable cost, ignore it. Wages consider it as well as contribution foregone also consider it. Remember the example what we discussed. See here, this is an example. Other order, material ignore it. Other variable cost ignore it. But labor wages have to consider as well as contribution we have to consider. So into 30 plus 4.5. Clear? Into 30 plus 4.5. So how much is skilled then? 50,000 divided by 4 into 34.5. 4 lakh 30 50 250. Clear? Easy now. Okay, next one. It should not be possible to employ additional skilled labor during the coming year. So it is not possible. That's what we are asking them to work on. If it is possible, we can buy a new labor. Next one. If superb is not manufactured, the company expects to have available 2 lakh surplus unskilled labor hours during the coming year. Even if we are not taking the superb, anyhow there is 2 lakh surplus hour per unskilled labor. How many unskilled labor is required now? 1 lakh. So using from the existing idle time, any relevant cost? Using from existing idle, if we start superb or not, still we have to pay the wages, right? So no relevant, so ignore it. Next, because the company intends to expand in future, it has decided not to terminate the service of any unskilled labor in a foreseeable future. Okay, that's okay. So anyhow they are vacant. Why we have not, as they are vacant, why we have not removed them? Because whenever we get a new order, suddenly we may not get it labor, right? So that we are maintaining them. So as anyhow we are maintaining them, we are going to pay wages, so they are irrelevant. Because of this new order, are we incurring any additional thing? No, so ignore it. Next point. The foreman is due to retire immediately on an annual pension payable by the company of 60,000. He has been prevailed upon to stay for a further year and defer his pension for 1 year in return for his annual salary. Sir, actually the foreman is there. Currently we are paying 1,50,000 rupees. No, he is about to retire. But we went to him, sir, you worked with us for almost like 10-15 years. You are a very senior employee. We want your service for 1 more year because we are starting a new product. If it is a new worker, you may not handle it. Can you please extend your service for 1 more year? He agreed for that one. If you have not taken this superb, anyhow we might have paid 60,000 as a pension. As because we are asking him to work on, we have to pay 1,50,000. How much extra wages we are paying? 90,000 we are paying. See, what he is saying is that as he is getting salary, 1 year pension he has to forfeit. See here what they are getting. He has been prevailed upon stay one for a future year, and he has to defer his pension for 1 year. So he has to forego 1 year. Different persons postpone, and if it is postponing, still his life is not going to be changed, right? Till death, I have to pay 60,000. If you work for 1 more year, also his death period is not going to be changed. It means if you work for 1 more year, anyhow that 60,000, you no need to pay it. Understood? So for supervisor, without superb also we have to pay 60, but with the superb we have to pay 1,50,000. What is relevant? Additional thing only has to be relevant cost now. Additional fixed cost only relevant. So it has to be 1,50,000 minus 60,000, which is 90,000 is relevant. So this is relevant wages, relevant labor cost. How much it will be? 5,21,250. Clear? That's about labor. Next. Overheads. Okay, they talk machinery. They're talking about machinery first. Let's talk about that. 2 machines were used to be required for manufacturing superb MT4 and MT7. Details of each machine are as under. You want 2 machines, MT4 and MT7. Now straight line depreciation is chargeable for the existing life, irrelevant. It is already purchased, already you are going to provide depreciation irrelevant. What do they say here? Tip-top Textiles owns a number of MT machines 4 which are regularly used for various products. Each of MT4 is replaced as soon as it reaches useful life. Existing one, regular use, then it has to be fallen. Resale or replacement? Replacement only. Sir, a machinery which is regularly in use, if you use it also again we have to replace it, then it has to be falling replacement value. So replacement value from 80 to 65,000 is falling. So what is relevant for MT4? For MT4 it has to be 80,000 minus 65,000, which is 15,000. Okay, next. MT7 is no longer used, and one such machine would be used for superb is only for company as now. If it is not used for a production of superb, it would be sold immediately. Not in regular use, fall in resale value. For both the machines they are given resale, replacement as well as resale. But what is the machine we discussed? Regular use, fall in replacement cost. Not in regular use, fall in resale value. So fall in resale value is 3,000. So MT7 11,000 minus 8,000, which is 3,000. So what is relevant cost per machinery? 18,000. Next one is overheads. Now, a predetermined rate of recovery of overheads is in operation, and the fixed overheads are recovered fully at a regular production of 3.5 per laborer. Ignore it, because it is absorbing from the existing one. It is recovered from a regular production. Clear? So ignore it. Variable overhead cost for a superb is estimated at 1.2. Variable cost is always relevant. Fixed cost is, if it is an additional one, consider it. But we are just absorbing from the existing one, not relevant. So variable cost is relevant. Variable, how much they said? 1.2 per unit, so it has to be 50,000 into 1.2, which is 60,000. Now what else they told? Now for decision making, incremental cost based on relevant cost and opportunity cost are usually computed. Okay, that's what we did. You are required to compute such a cost sheet for superb that will have all the details of material, labors, etc., sustaining the figures with necessary explanations. Okay, this has to be the relevant cost. What is total relevant cost? Materials, it is 4,28,000. Labor, it is 5,21,250. Machinery, it is 18,000. Overheads, it is 60,000. 250. And what is offering? Is offering is 50,000 at the rate of 25. 1,25,000. As revenue is greater than the relevant cost, we can accept the proposal. So total cost is 10,27,250. Sales is 12,50,000. 2,22,750 is the profit. You understood how do we got this? Understood? Representation, I'm giving this answer. You can take that one. But you understood how to solve it, right? 14 marks question, past examination one. So it's not very big one. It is just 4 small questions. Understood? Okay. Let's solve one more question from relevant cost only. Yeah, just one more question. And this is also past examination question only. Okay, anyhow I'll read point wise one. We can start doing that because relevant costing, anyhow that will be a point wise question only. You don't need to carry much question, right? So okay. See here, there is one machine manufacturing company had nearly completed a job relating to a construction of a specialized equipment when it discovered that the customer has gone into liquidation. Understood, right? One customer has given me to manufacture a machine. Got it, right? So after completion of some portion of the machinery, the particular person who has given an order, he got into liquidation. Understood? I got water from one person. I tried to complete that one. Almost it is completed, but that person became liquidated. Now, at this stage, the position of the job is as under. When the order is cancelled, the position is like this. Original cost is estimated at 1,75,200. Cost incurred so far 1,48,500. Cost to be incurred. If we continue furtherly, we are going to incur 29,700. But as because he is liquidated, why should I continue that one? I will ignore it. Now process payment received from the customer is 1 lakh. Now after such as వెతికిన తర్వాత a new customer for the equipment has been found. We found a new customer. Clear? And he is interested to take the equipment if certain modifications are carried out. Now let us talk about relevant cost for that particular customer to accept it or not. Now from the again, original cost estimated earlier. First of all, it is estimation only, not a cost itself. Irrelevant. Cost incurred so far. Sunk. Sir, forget about the existing order. Now if a new person is coming, right? He may offer very less amount. Okay, if he offer less amount also, can we accept it or not? That's what we have to think about. So after getting this new order, what is the additional incremental cost that only I am supposed to consider, right? And this cost is already incurred, so it has to be a sunk cost. Cost to be incurred. See, as new customer is coming, as we wanted that machinery, we have to execute that mission. We have to try to complete the rest portion. It means additional cost to be incurred means if you have not got that additional new order, we might have not done with this 29,700. We might have stopped it there. As because of this new order, we are going to continue it. So it means that has to be a relevant one. So it has to be relevant. Additional cost to incur. How much it is to be? 29,700. Clear? Okay, next. The new customer wants the equipment in its original condition, but without control device and with certain other modifications. So, when they manufactured with incurring this 1,48,500, they have installed one control device. But he is saying that remove that control device and remaining thing and do some other modifications, and based on that only I am going to take it. That's what they are saying. Clear? Next, what they are saying. The cost of these additions and modifications as under. To do modification, these are the relevant, these are the costs they are saying. All that cost is going to be relevant because all those are additional costs only, right? So that has to be a relevant one. See, direct material cost at cost 1050. No, sorry. Sir, what if that material is already having with us? Yes, definitely. For the new order, 1050 is the cost. But we have to talk about whether the material is already existing one we are using or whether we are buying a new material. All such things, so read it right for relevant costing questions. Now see the material cost. The following is additional information. Let us see here. So the direct material required for the modification are in stock already. And if not used for this modification of the order, they would have used in another job in the place of materials that will cost now 2,250. Though the cost is 1,050, if you have not, if you start with this modification, I will lose the opportunity cost of 2,250. So it means direct material is 2,250. Sir, it is already in stock means this is sunk cost. Sir, we already purchased it a long back, so it has to be a sunk cost. Now what? If not this order, you might have used in some other order. That's nothing but benefit from alternative use. Sir, if it is in stock, not in use, realizable value or benefit from alternative use only we have to take it. Same table and in the same table, no, they have not given realizable value. Instead, they given only benefit from realizable value or benefit from alternative use. If they give any only one, I have to take that only. If they give both, whichever is higher, I have to take it. Clear? Now, what is relevant cost? 2,250. Understood at this point? Okay, next one. Direct wages is 3,500. Let's see what about the direct wages. So the department is extremely busy. The wages of 2,200, 2,500 and currently yielding a contribution of 3.2 per rupee of direct wages. Out of this 3,500, 1,500 anyhow I have to pay newly, but 2,500 already they are working on some other purpose where we are getting a contribution of 3.2 per rupee of direct wages. Understood, right? It means for these 2,500 what I should consider? Wages plus contribution foregone. For this 1,500 only 1,500. Understood or not? But for this one additionally we have to buy. For additionally we have to pay 3,500. But the thing is that out of the 3,500, 2,500 of wages, we are asking them to stop some other work and we are calling them. Clear? And for that wages plus contribution foregone I am supposed to take it, right? So for wages what should be Direct wages, what should we take? 1500 plus 2500 plus 2500 into 3.2. This is wages, this is contribution foregone. Wages plus contribution foregone, both I am supposed to take it. Understood? Easier. So how much it has to be? See here, for every rupee of direct wages 3.2. For every rupee of direct wages, it means for every rupee means 2500 into 3.2 will be the opportunity cost. As well as, but if I take only this, that will be a mistake, because I have to cover wages also, right? Simply speaking, asking from some other place, remember the table, it has to be wages plus opportunity cost. So how much it will be? 12,000. Clear? Okay, next what do they said? Variable cost, 25% of direct wages. How much it has to be? So 3,500 into 25%. This is not direct wages. This is just opportunity cost foregone. Not 12,000 into 25%. Understood? Wages is 3,500 only, but relevant wages is 12,000. What it tried? Variable cost will not be for relevant wages. Normal wages only it will be. Clear? Understood? So for 3,500 only I have to apply that 25%. How much? 875. Next, delivery cost. Anyhow, that has to be additional cost only, because to deliver the machinery for the new customer, there will be 1350. Delivery cost is 1350. Next, fixed overhead will be absorbed at 50% of wages. Absorbed. It's nothing but existing one, no additional things. Ignore it, irrelevant. Clear? Okay, then supervisor overtime payable for modification is 1050. One of the supervisor, just to make this modification, he has to work on OT, and additionally we are paying. It means additional wages, additional fixed cost only. So relevant. Supervisor OT, which is 1050, which is relevant. Clear? Next, the cost of control device that the new customer does not require is 13,500. Ignore it, that will be a sunk cost, because already you spend 1,48,500, right? Out of that one, there is a control device of 13,500. That's what there is, the cost of that. That you don't need to bother. If it is taken out, it can be used in another job in the place of different mechanism. This later mechanism has otherwise bought it for 10,500. The dismantling of the removal control of the machine is 120. Dismantle and removal cost. Understood, right? This is cost saving. As because he said that I don't want that controllable cost, they can remove that and they can use it some other equipment where they can save 10,500, but to remove that they incur a cost of 120. What will be the net saving? So savings from control device, 10,500 minus 120. How much? 10,380. That has to be relevant. That should be deducted. I already told you, the cost savings should be treated. It is further cost saving only. Going forward only we are going to save it. Clear? So it is relevant. Next, if the conversion is not carried out, let us say if this conversion is not carried out, some of the material in the original equipment can be used in another contract in the place of material that would have cost 12,000. That is relevant cost only. So what they are saying is that already some portion of the work is done, right, by incurring this. If I have not got this new order, we might have removed that, we might have dismantled that machinery which is already having, and I can use that dismantled parts in some other way. As because this order, I'm not able to dismantle it, which is nothing but an opportunity cost. Yes or no? So should be considered or not? Yes, considered, because it is a relevant one. Opportunity cost is relevant. So 12,000, but it would have taken wages cost of 240 to make it suitable for this purpose. Yes, 12,000 we are going to incur, but to make it suitable in some other way, additionally we have to incur 240. Understood? So that has to be deducted. See, if you see, if the conversion is not carried out, some of the materials in the original equipment can be used in another and could have saved. In this place, the material could have saved 12,000, because in the place of another we can use it. There we can, the other material cost is 10,500, right? Understood or not? So what they are saying is that if you have not got this order, we might have dismantled this part. I might have used it somewhere, but wherever I am using, if I am not taking that part to that particular some other purpose, they might have purchased it for 10,500. The 10,500 additionally we are incurring because of this one. Sir, remember, there is some other order, some other project D. Some other project D. It wants one equipment where the cost is 10,500. Clear? If this order is not got, they might have not purchased that 10,500 because they might use some of our parts in that purpose. Understood, right? It means as because I have given a new order, they had to buy now 10,500, which is nothing but opportunity cost. Clear? Because of us only they incurred that additional cost, right? So that is relevant. Because of this order we incurred additional 10,500. Clear or not? Clear? Okay. So, but so not 10,500, 12,000. 12,000. Sir, but it would have been taken the wages of 240 to make it suitable for that purpose. But to do that, they might have incurred 240. Now the 240 is not incurring. So that is the saving then. So 12,000 minus 240. Sir, because of accepting this order, they additionally incurring 12,000. So 12,000 is relevant cost for us. But they are saving 240. It means that is also savings because of us only. Okay, read it once, read it once. It's not a difficult one, read it once. Sir, let us suppose your project manager D. I am the person who is manufacturing this machinery and some other party given an order. Now let us say if that order is not got, I might have dismantled this machinery and I have given one of the part for you, so that you no need to buy a raw material which cost 12,000. Yes or no? But as because this particular person is giving an order, I am not giving that part for you. It means you have to buy a part then. And what is the cost for you? 12,000. Because of new order, you have to spend 12,000. Because of new order only we have to spend it. That it will be relevant for this order. Because organization has to spend 12,000 rupees extra because of getting this new order. If this new order is not got, in the place of the 12,000 part, I have given the existing part to you. Clear? But if you have taken from this particular machinery, you have to dismantle that one, right? To dismantle that, I might have paid wages of 240, but I no need to do that dismantling. That will be a saving then. So 12,000 is additional relevant cost. 240 is a cost saving. Understood now? Clear? Sir, if I have not got new order, I have to dismantle part, right? To dismantle that, I have to pay wages of 240. But you can save 12,000 rupees. What is your net saving? Though you say 12,000, but to dismantle that you might have paid 240 rupees wages, right? Clear? So 12,000 minus 240 is the net saving. Okay. Opportunity cost of material, which is 12,000 minus 240. How much? 11,760. Clear? Okay. Next. The remaining materials would realize 1140 as a scrap. Some materials is used by some other product. The remaining materials are also there right from dismantling. That can be sold as scrap. Scrap value of other materials. That is also opportunity only, right? How much is that? 400. Clear? 11,400. Next, the drawings which are included as a part of the job can be sold for 1,500. If you have no new order, the design cost and all things you might have sold it for somewhere. It is also sale value of drawings. 1,500. This is also an opportunity cost. Because of accepting this order, we have not got that 1,500. That is also relevant cost. Calculate all the relevant cost. 61,505. But how much they are given here? 60,945. Calculate once again. $61,505. Did we miss anything? 240 into 25%, 60 rupees minus 60,945 plus 60. Our answer has to be 61,500. 500 rupees extra we are getting. I wantedly miss 60 rupees just to make you to understand. Before itself I explain it, you may not get some points. So let me do it wantedly a mistake. I wanted to show you where I did mistake. 60 rupees only I wantedly missed it. That I can agree. But 500 by we are getting 61,005 we have to get it. Okay, let me check quickly because in regular class I solved this question. Relevant costing, right? Relevant costing. Yeah, 29,700, 2,250. Direct wages you see 12,000 you told me, but it has to be 11,500. Check it once. Yeah, 2,500. 2,500 plus. Okay. ఇక్కడ 1,500 రాశాను. So it has to be total 3,500, 2,500, it has to be 1,000. Okay. 2,500 into 3.2. That's what. So it has to be 11,500. If that is 11,500, our answer has to be 61,005 rupee. But How much is the answer they given? Got it right. See, even first when I did this sum, I got that 60 rupees difference. It took around 3 hours for me to identify what is the mistake. That is the reason why I wantedly made it. It was simple only, but we have to carry questions in such a way that if we are saving wages of 240, let us say, if you have not saved that 240, if you might have incurred the 240, variable overhead of 25% on the 240 also might have incurred. Student, check how much detailed we have to do it. Because by the time we get this point, we might have already forgot the points which we already taken. So what did, see here, what did they given? Say, wantedly missed it because when I explain like this, at least you can remember for the next time. Clear? If you see here, the wage cost of 250, we have saved it. So if we have saved wages, variable cost related to the wages of 25% also might have saved it. Understood it? What is 25% of 240? 60. That is the one we are supposed to take it. So 240 minus 240 into 25% or 240 plus this. 240 wages we are saving. If we are saving 240, variable cost on wages also we are saving. Clear? So such thing we have to carry. Clear? Then it will tally. How much it will be? 60,945. Clear? So relevant costing will be very simple. Take it 3 things into consideration. Because of this new order, are you incurring any additional cost, incremental cost, that you consider that. If you are saving some cost, that you consider. If there is any opportunity cost, that you consider. With these 3 points and with those tables whatever we have drawn, all the relevant costing questions you can solve it. So today itself complete all the relevant costing questions from whichever the institute material you followed earlier. Clear? Complete it, and as marathon, scheduled marathon classes are completed, but we are not able to complete full syllabus whatever we planned it. I will inform when I am going to take it, because as it is not planned, I am already having some other classes, but definitely I will take it within a week. Within a week, definitely I will take it. If not possible, at least coming Sunday I will take it. 4 to 5 hours of coming Sunday I will take it, and I will complete rest of the topics. But if you come for offline classes, it will be much more better. Try to come for offline, because next 3-4 topics it will be easy only. Offline means you can concentrate it and you can complete it little bit faster. On the same day you can prepare it. Clear? So remaining 5 chapters also definitely I am going to complete it. Clear? But give me a week time, then I will ask them to inform. At least you are following this Telegram group of shikharatutorials, right? In that group I will ask them to message. Just look those for messages. Definitely within a week I will have classes. If not on Sunday, if not possible also, after 6:30 to 8:30, 2 days I will take it. Because up to 6:30 I am having classes, already planned classes. Then definitely I will take it. Clear? Okay.